All right, everything looking good. Should be live coming through. Okay, welcome back to the channel, Crypto Trend Trader, with our midweek market update. It is Wednesday, 10/13/2021 Eastern Standard Time. Before we get started, I'd like to remind you this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. All right, well, so as you can see, gold finally putting in a little bounce there. Starting to look a little attractive again. We have a move down in the dollar and yields as well, which is, obviously been inversely correlated recently to gold. So, one explains the other, etc. We also have some decent little pushes up in crypto. Quite a few stocks, including gold and silver miners, making moves. Definitely a decent amount of volatility in the markets if you are in the right place. Still have not completely identified what's going to be our big mover for the rest of the year, but we are starting to see a couple of signs of that. So definitely keeping an eye on that as well. I do want to discuss a little bit. Also, we talk about the relationship between a lot of the important things in the market and why I specifically look at some of these charts, like the DXY, like the TNX or treasury yields, like oil, and why these are so important. We talk about the relationship between some of them, but I want to talk about specifically some of the head and tailwinds behind some of these different things as we start to hear, about energy crisis going into the winter and extra taxes and, increased wages and how this is going to affect all these different things. And so what we need to look out for, because a lot of times we'll talk about the correlation or we'll talk about one thing, the relationship between one or the other, but we don't talk about the in-depth relationship of how these things affect each other. So I want to get a little bit into that today. Also going to talk about a couple of our recent picks that are moving as well, and some trade setups we'll check in on. But we will look at the broader markets. We will look at our commodity markets as well, and then obviously our tech and friends and crypto. So let's go ahead and we'll get started with yields real quick here. So obviously not much has changed here for yields. We would expect to run into some resistance in this area as we're basically just working our way through this cluster of support / resistance. We have broken down, and essentially this to me is a support area. We have a bunch of bottoms throughout this area. This was basically our descending channel, triangle rather, that we broke down from. So, pushing up into that area is going to be resistance, and then we would expect to come down and find support at the top of this little peak here, and then also this support as well. Nothing has really changed. We were obviously getting to higher elevated levels here inside of the bullish control zone. So I don't think we're putting in a long-term top right now, but it would not be unrealistic to think that we will chop around in this area. As long as we are still on top of the 200 exponential and simple moving averages and their slope to the upside, I am still macro bullish on this, especially on this specific time frame. As you can see, though, this was basically our descending triangle. That was our breakdown. Now we have the ascending triangle. That was our breakup. So even if we come down as low as our 618 at 1.45, nothing to be alarmed about whatsoever for me personally. So, and then obviously if we flip over to TLT and we look at our 20-year treasuries, we go to the shorter time frame. We can see right here, we're basically just having the inverse move. This one has broken down below the 200 exponential and simple. It's trying now to reclaim the 200 simple, but the slopes have flipped back over bearish. So in order for this to even look neutral again or potentially bullish, we need to reclaim the area of 146.9, 147 roughly, but we are inside of the bearish control zone, looking like we're about to exit that sometime in the near future and get the hard buy signal. Couple green histograms in a row below the zero line, telling us that it's not unrealistic to think we could come up here, but we would expect to put in another in a series of lower highs when we do. In order for something to change, we would have to see a breakout above this point here, or consolidation above the moving averages on the daily once again. So and then VIX is not doing anything in particular. If anything, it's moving down to the neutral or bullish zone for the stock market. Anytime we are below the heart lines of either the macro channel, top to bottom of our screen here, the red and green areas, this is our neutral area, and the absolute neutral is the orange heart line going across here, and then inside that smaller pattern we have the descending channel with obviously this heart line here, which is basically matched up perfectly with the 200 exponential and simple in red and pink here. So as long as we're right around in this area, we're basically neutral on all levels, and as long as we're neutral, I would expect us to continue to melt up in the stock market as well. However, we're not necessarily seeing that in the broader markets. We are starting to see some of the indexes cooling off a little bit, but again, you can be neutral bullish, neutral bearish, or have like daily or weekly moves outside of that range. But as far as I'm concerned, unless we're approaching the bottom of this channel here or the top of this channel here, I don't expect extreme volatility or anything, and until we break out of this channel in one direction or the other, I don't expect there to be a top or confirmed like big breakout, like parabolic upside potential or downside potential either way. So now let's talk about oil, and then we're going to move into commodities. So I talk a lot about the DXY. I talk a lot about oil and rates as well, obviously. I talk about the relationship between those and why they're so important, why I use them and look at them first to get like a macro view and micro view of what's taking place in the markets. But sometimes people don't understand why. Why I refer to oil a lot of time as the cost of, transportation. The oil itself is the cost of production, the cost of manufacturing, the cost of transportation. It's the cost of all these things, because you need oil, you need gasoline or diesel or jet fuel or whatever to basically fuel the economy. Obviously fuel, little like analogy, metaphor, whatever there, but that's, it's used to fuel the economy, to fuel production. In the same way that rates I refer to as the cost of money. It's the price of borrowing money. So if rates are low, people are going to borrow more money. Therefore, they're going to put more money into various places, whether it's the actual economy to grow a business, whether it's the stock market, to grow your investment, et cetera, et cetera. In the same way with oil. If oil is expensive, people are less likely to use it in a productive way. People are less likely to drive. People are less likely to, fly. There's less likely flights. There's less mining taking place. There's, the more expensive an input cost is, the more expensive the good then has to be. So it's basically like the price of oil is a downward pressure on production. As oil goes up, production will tend to go down. And again, that's what we're seeing taking place right now in China. China started manipulating their economy, not started, but what's going on in China right now is a lot of their power plants are shutting down because they're losing money, because China has put in play like fixed prices that they're allowed to charge for energy, but the prices of coal is going up. So they're losing money. So the more energy they produce, the more money they lose. Therefore, a businessman would say, well, I'm going to produce less energy or no energy. Otherwise, I'm going to lose more money. So if I'm losing more money, the more energy I produce, I'm going to produce less energy, so I lose less money. But I retain my workers, keep my plant online, and then hope that eventually this subsides or they take away like the price fixing or whatever. So you have to think about that, in the broader sense of the cost of energy. As oil goes up, certain things will no longer be profitable. So what are your options? Well, if demand stays the same and the price of your input goes up, so let's say oil to, mine gold, for instance, you're going to say, okay, we're going to have to raise the price of gold. The price of gold has to go up to account for the increased price of the oil or of the production, whether it's labor, whether it's taxes, whether it's the fuel that you use to dig up the rocks and power the machines that mine the gold. So if the actual demand stays the same, and these are all fluid things that we're looking at, little levers that are being pulled left and right and being influenced by governments and policies and, the economy itself. If the price of oil, if the price of gasoline, if the price of the fuel of the economy goes up, we would expect over time those prices to be passed on to the end user. So then the price of the good itself goes up. So if you're mining gold and oil goes up, you would expect gold price to then go up. And then demand will then be negatively correlated. As the price of oil goes up, as the price of gold mining goes up, the price of gold needs to also go up as it's passed on to the consumer, or it may not be profitable for some companies to mine gold. Therefore, when the price of gold starts to go up, then the consumer demand may go down. But of course, if there's instability in the economy, or, currencies are crashing, or people are scared, or, whatever the other situations are, we may see the actual demand go up as well. So if it goes up by the same amount, you end up in the same place, and it's fine. If it goes up by less, you may have, you know, curve the price back off and neutralize out, and vice versa. So we need to pay attention to the correlation between all these things, you know, and what's going to happen with each of these assets as we go. So as oil starts to go up, what are we going to see happening in economies and in production? Well, we would expect all other commodities to probably raise their prices with oil, because if oil is the cost of production, and then the production being running, you know, farm equipment or something like that, or mining for gold, or flying jets, transporting things in trucks or trains, or, you know, whatever, we would expect the price of oil rising to affect all commodities in the same direct relationship. So if oil continues to rise, I think we will continue to see commodity prices rising as well, as people, you know, basically have to pass on the costs to the consumer, to the end game. So that's, you know, direct relationship with commodities. And I think that that's the strength in oil is going to show us strength in things like gold as well. Now, obviously, it's different when you start to look at miners and companies and stuff like that. So what else? What's the difference between an actual commodity and like a company is that sometimes the cost of your input costs, such as oil, will make your company less profitable. Therefore, your stock may not act in that same relationship. So for instance, you know, if you have, and there's plenty of headwinds like that, taxes, you know, cut money off of profitability, input costs, labor, you know, oil, all these different things, you know, are going to affect it. So all these input costs take away from profitability, therefore make valuations less attractive at higher multiples for like stocks, but they make the actual commodities go up. So then miners have those two headwinds, you know, or a headwind and a tailwind. They have increased costs to produce it, but then they also have, you know, decreased profitability from, you know, having to pay people more wages or having to pay more to transport things. So therefore you have to see, is the company now going to be more profitable or less profitable? Well, you take all those factors, weigh them in, and then you have to weigh in also the actual price of the commodity itself. So if demand is higher, and that demand is high enough at the increased prices that it can make up for the cost, then, you know, the commodity itself can go up. But that may not translate for miners, because what you have to look at with miners is, you know, their valuation is based on the amount of, you know, that precious metal or whatever that's in the ground. If they have, you know, 1,000 tons of whatever, and that's the price of their company, you know, they may be profitable at a certain level, but not profitable at another level. So assuming the run up in silver and gold that's already taken place, given most of these companies the ability to stay profitable at a nice level, and then also, you know, the cheap cost of money through low rates has allowed them to shore up their balance sheets and take on additional investments. Now, if we do start to go into another bull market, we would expect those, you know, miners to go absolutely parabolic and see the moves that a lot of people have been waiting on. Now, is that the case? Is that what's going to happen? Maybe not. You know, it's still a little early to tell, but we're paying attention for things like that. So let's look back at oil here and take a look at what we're paying attention to. So I'm gonna have to mess with this chart as always. As we switch time frames. So here we have basically, you know, this is the levels we've been watching here for some time and paying attention to. And what we were talking about was breaking out above that green support / resistance, which was 80.78 on US oil. So now that we have broken through that, actually it was slightly less. The current price is 80.78. The neckline was 76.87. So now we have essentially broken through, you know, this is our like rounding bottom Eve and our sharp bottom atom, or double bottom pattern, or whatever you want to look at it as. But most importantly, on the monthly, we're now above the 200 simple, we're above the 200 exponential, the 8 and 21 are crossed to the upside. All those are flipped over, you know, blue or green. So positively, we're inside of the bullish control zone. We have all green histograms. The slope is blue. You know, everything is bullish on this chart on a monthly time frame. So what does that tell us? There's a lot of chop above our heads right here. There's a lot of, you know, resistance that we're going to have to work through. You know, and I always, you know, try to picture this as what we're paying attention to. We have this price action right here that we need to get through. that's a couple years worth of price action. And then we have a couple years worth of this sideways price action we need to get through. This is basically like resistance / support from 2009 till 2014. So, what amounts to like 6 or 7 years worth of price action in this area right here. But that's of all time. And then we have all of this below us, all this price action that ever took place below us is support. So if you look at it and you take out, what idiot people like Kathy Wood are saying, and, Jim Cramer calling for a top in oil and saying oil's going down, it's done, it's over, it's not profitable for companies. You just ignore all those morons and just look at this technical chart. If I tell you below us, this is the support we have. Think of this green block as just a big piece of concrete, a foundation below us. And then think of this as the resistance. This is a little piece of drywall above our heads. And we're trying to bust through one or the other. And we're just going to keep jumping up and down. And we're going to hit our head on the drywall. And we're going to land our feet on the concrete. And we're going to eventually break through one of them. Which one are we going to break through first? Are we going to break through this giant block of cement below us? Or are we going to break through this itty bitty little piece of drywall above our heads? If we slam up against those two enough times, do you think your feet are going to break through the concrete and we're going to fall back down? No, it makes no sense. We're obviously going to hit our head enough times on the drywall that we break through it. So that's what I'm paying attention to. That's what I'm seeing on the oil chart. So the likelihood, now that we have broken out above this area, we could come back down, we could consolidate, we could dip back inside of the concrete, whatever, that's fine. But the fact that we're above that area now and we have all this foundation underneath us tells me the likelihood of oil going down anytime soon is very unlikely. And then when you take into account, but there's plenty of other factors you can look at, okay? But the fact of the matter is, there is a war on oil going on right now around the world. Everybody wants clean energy and green energy, and we got to save the world, and we need to stop this pollution because it's bad, and we're bad, and we need the green energy, and we got to save Mother Earth. We are literally fleas on the back of Mother Earth. If Mother Earth wants to get rid of us, she will send a tornado or typhoon or flood the earth or, a plague or whatever and get rid of us. We are fleas on the back of the earth. We have little to no effect. So the fact that people are scared that we're going to hurt the earth and the earth is it's going to die because of it. Well, there was dinosaurs before us, and there was cavemen, and there was thousands of civilizations, and they're all wiped out. And we're here now, and we're arguably the most technically advanced civilization, but the least intelligent, because we're just absolute ridiculous, and society structure is breaking down. And all that aside, I don't think there's anything to worry about. Okay, the Earth's not going anywhere. Unless we start nuking the Earth, and then maybe we kill a bunch of the stuff on the surface of the Earth, but eventually, I think the Earth probably makes it. But regardless, there's a war on oil. So what is that going to do? It has stopped people from investing in oil. So if you end up with a bunch of people not investing in oil and not putting money into oil because of the green initiatives and this, that, and the other, and everybody's going to renewable energy and all this stuff, what is that going to do? Sure, maybe you can get some people to consume less oil because they want to be green and they want to be good people. And there's an ESG movement, and we got to be green because we're going to get scored. We're going to get a social rating based on how clean and nice we are to the environment. Sure, okay. So nobody wants to invest in oil because the long game looks bad because everybody wants to get away from oil. And then you don't want to be mean to the earth and the environment, so you don't want to have a bad reputation because people will cancel you. Sure, okay. So what is that going to do? Well, the demand for oil is not going to go away. Maybe a little demand goes away because people don't want to use it because they want to be good people. So they push lawn mow their lawn, like in California, or maybe they get some shears and they just cut their grass like that. Because it's illegal in 2024 to use a lawnmower with a motor. Sure, okay. Meanwhile, the whole world uses oil and runs on oil, and there's nothing in place to, replace that system. So what is that going to do to oil prices? There's less money going into oil. There's less, of our intelligent money investing in oil to make it cheaper or more profitable or drill more out of it. It's going to make oil prices go up. Oil prices are going to go up because we're going to have a little less demand. As people try to be clean, they want to be good people. They want to fit that ESG narrative. But that's going to force the price of oil to go up because we're going to have less production coming online or the same production coming online. But we're not done using oil. We still need it. It's still literally what the world runs on. So this to me is very viable that we're going to break out to the upside. And in this case, we have a 58% move. So you're not going to obviously go out and buy barrels of oil. You're not going to store some barrels of oil in your backyard, and store 100 barrels of oil and then turn around and sell them, once this reaches, $100 or $150 or whatever, our next target to the upside is. So what's a way that you can invest in oil? Well, you can invest in the producers, some of the big oil names, natural gas, oil, pipelines, Chevron, like whatever you want to look at. You can look into all those for sure. Or you can look at what's going to benefit from the increased cost of production, aka oil, the cost of, transportation. What's going to benefit? What is going to pass on those price increases to the consumer or end user or producer, that is going to still have more demand or more profitability? You have to pay attention to that and look at it. Is it going to be gold? Yeah, sure, probably. This will probably push up gold prices over time. If oil becomes more expensive, gold will probably go up as well, just with these two factors in mind. Silver, maybe uranium because it's a competitor, but also you have to use oil to produce uranium. So then people say, well, if oil is going to be really expensive, maybe it is more profitable because uranium's cheap right now. So nuclear power all of a sudden, becomes better. And then also it fits into like the clean energy narrative. So uranium, sure, that looks good. And then what else? Farming stuff. You're using your farm equipment, you're using oil, you're using gasoline, you're using diesel fuel, to operate a farm, to, get your corn or your wheat or whatever, your sugar, all those different things going to be affected by this. So we would expect if oil prices rise, the majority of these things will also rise. A lot of your like necessity commodities, etc. So that's what I'm paying attention to. And at this point in time, this looks all but, our next target to the upside, $100. After that, we have this trade set up in play up to like 115. And then by the time we get to 115, the higher we get over here, how much resistance are we going to have left? This is the resistance. This is what we have to worry about bursting through. That, once we get up to $115, once we hit our trade setup right here, this is what we're fighting. Let's look at this chart. Everything below us, all this concrete, this foundation has been laid down below us. Once oil reaches 115, this is what we're fighting. We're fighting these, 1, 2, and then 2.5 months. So we have 3 months worth of pressure that we're going to try to break through. That's, we have 3 little itty bitty pieces of like the paper that holds the drywall together to break through before this thing just goes parabolic. And then after that, how high does it go? You start looking at Fibonacci extensions. We can start looking at all kinds of different stuff. It's very hard, obviously, with the wick, because this is, because it went to 0 and whatnot. Because normally I would take from like the high to the low, but you almost have to like rule out that wick basically. But essentially, what are you going to do? You take like the macro swing high here, and then you take 0, and then go from that. Probably something like that, go down here to like $17 to $20 a barrel. And then we start looking at, what's our, damn it. I did not mean to do that. We start looking at, what's our Fibonacci extension targets. Oh, I hate this chart. I wish you could just like rule out a little wick, like delete it. We back at all-time highs again, 150, 1.236, 242. Oh, it'll never go to 242. That's crazy. 426 a barrel, 1.5, 1.618, $545 barrel of oil. It's not possible. Oil could never go to $500 a barrel. That's ridiculous. Well, there's plenty of different things. If demand is still high, but production goes down, if the currency that the oil is denominated in crashes horribly, $500 for 1 barrel of oil might be the equivalent of $150 for a barrel of oil, because purchasing power has been destroyed through, money printing or whatever. There's plenty of viable possibilities that would make this the case. And again, looking at the macro and all these different things factored together is so very important. But, there's an argument to be made that, oil is, I think it's very viable, especially after just that tiny little basic conversation that we just had there, or, you know, me having a conversation with the internet. You know, I think it's very viable to think that oil is going to new all-time highs very, very soon. Everything else is going up in price. Most everything else is at all-time highs. And again, we have a tiny little piece of drywall above our head. We have that itty bitty piece of like construction paper that's like stopping us from just breaking through once we get to 115. So for me, it's time to start looking at where we need to invest to make money off of this, because we're not going to buy barrels of oil and keep them, you know, in a bunker or in our backyard or whatever. We're not going to do that. We're not going to fill up gas tanks and, you know, store gasoline in our backyard. What we're going to do is we're going to buy something else that's going to protect our purchasing power as the price of oil goes up. So what is the best way to do that? Well, if we need a bunch of wheat because we own a farm, or a bunch of corn because we own a farm or whatever, and we need to feed our cows, or, you know, we're going to need whatever, you know, a ton of water so we can water our crops, and then the price of water is going to go through if we know all these commodities are going to go up, you know, whatever our business is or whatever our, you know, main consumption is, how do we protect our purchasing power? Well, since the beginning of time, the oldest thing in existence that has been used to protect that purchasing power, and you can look back over thousands of years, you can look in, you know, old texts from, you know, Roman days or the Bible, or, you know, old, you know, whatever. And you can look at the relationship between different commodities over time from whatever source you want to look at. And you look back and you can look at the relationship the same way you have like the Dow gold relationship you hear people talk about. You might have gold to wheat, or gold to corn, or gold to, you know, a house, or gold to a cow, or, you know, whatever it is. So that brings us into basically what I want to talk about next. I'm going to skip over and leave oil now. And now we're going to go over here and we're going to talk about gold. Gold is that thing. Gold is what you buy. If you can't fill up a silo with corn because you're going to need it to feed your chickens, and your chickens are your livelihood, what do? Well, gold protects your purchasing power. So you buy a bar of gold instead of buying a silo full of corn, because you have to use up that corn in a certain amount of time. You have to keep it dry, and you have to make sure that it's kept clean and there's no rodents in it, and, you know, there's no contaminants or anything. It can't get moldy, you know, et cetera, et cetera. It has like a shelf life. Gold does not. So the idea behind gold, and the argument that people have about cryptocurrencies, is, well, you're storing energy for the future. Well, no, you're storing purchasing power for the future with something like cryptocurrency. Gold is actually storing purchasing power as well, but it stores the purchasing power through exhausted energy, in the same way that people argue about cryptos. But we're not going to talk about the relationship necessarily between those two things and the difference between them, etc. But the fact of the matter is that what you're doing basically is you're just buying that wheat, but instead of buying wheat, you're buying a bar of gold, and then later on it's like a futures contract for wheat. So you say, okay, I'm going to buy a silo full of wheat or corn or sugar or whatever in like a year or 2 years or 5 years or 10 years. But I can't store that because it's too expensive. I don't want to have to pay all that money. So what I'm going to do is I'm going to just buy gold bars, and then I'm going to put them in a safe, or I'm going to bury them in the backyard, or, you know, I'm going to pay someone, you know, to store them for me in the meantime, much, much less, and not have to worry about that contamination or degradation or whatever. And then when I need that wheat, I'm just going to convert those gold bars into the wheat that I need, or the corn that I need, or the sugar that I need, or the soy that I need, or whatever it is. So essentially, gold is basically, you know, even though we don't look at gold the same way as we used to, as like sound money that we're going to convert later into other assets, gold is basically just the barter between your current currency and that good or service that you need. But in many ways, gold is essentially just like the trading vessel between commodities. That's how I look at it. It's a store of value, because you might not get rich on gold. There's very few events that are ever going to happen that you're going to get rich on gold. Investing in speculative assets, you're going to do much, much better over time. But you're going to protect your purchasing power by investing in gold. You're going to protect yourself in uncertain times by investing in gold. That's what it's used for. And that's where people get confused. And silver is somewhere in between, because it also is used in the same way to protect your purchasing power and has a denomination based on its relationship to gold. but it's also used for something. Gold is not really used for something, and the price is high enough. You know, you could use it for gold, like gold jewelry, or you can use it in computer chips or whatever. But the fact of the matter is, all the gold that's ever mined is still like on the earth and still usable, and it's valuable enough that people go through and collect up little computer parts and then extract the gold back from it, and then the gold stays on the market. Silver is actually like used up, and because the price is so low, it's not worth like recovering the actual silver from it. So there's a lot of different variables. The majority of gold is used by people as a store of value, or to make jewelry, which is essentially just an overpriced store of valuable because it looks good or it shows off your wealth or whatever you want to call it. But the actual silver itself is like used in production of different things, you know, solar cells, whatever. That's its main use. Most people don't buy silver for jewelry, the percentage of the actual amount that goes into it. And then, you know, something like copper, for instance, sure, it looks pretty and maybe they put it in some jewelry or whatever, but the majority of that is used up in production. So silver is kind of like the in-between of copper and gold. So it's important that you see the difference in all those things, and then make sure that you understand the actual purpose of gold and what we're looking at. So the same way that we're talking about oil potentially going to $500 a barrel, if, you know, the currency melts down or whatever, if we look at that same, if that same event takes place that made oil go to $500 a barrel, it is no longer going to be profitable for any company to mine gold at, you know, $1,800. So we would expect 100%, one of two things going to happen. Either people are going to completely stop mining gold and there's no more gold because it's not profitable anymore, or the gold price is going to go up in relation, like, you know, a direct correlation to the price of oil, which is what will happen. It's a fact. So we would expect, like I said, all commodities to go up as oil prices go up. So if, you know, oil's at $80 a barrel right now and it goes up to $160 a barrel, is gold going to go from $1,800 to, you know, $3,600? Maybe. Sure, but there's a lot of other factors as well. So maybe it doesn't go up in a 1-to-1 ratio. Maybe it goes up at 1.5-to-1 ratio. You know, but that's all the other factors. So the best way to see if one of these commodities is, you know, essentially you start looking at like the multiples. So you can create some crazy formula like, you know, and go back through time and back test it and say, okay, if oil is $100 a barrel, what is the price of gold on average when oil is $100 a barrel? If oil is, you know, $50 a barrel, what's the price of gold? And you could create some fancy formula that tells you exactly that. And you could put into other things in there and try to figure that out as well. And then use like a currency multiple, etc. The best way to do it is just look at the 200 moving average. Look at a daily time frame, look at the 200 moving average and say, okay, if we look back 200 days at the moving average, is gold overpriced or underpriced right now? So right now, gold is literally touching the 200 exponential and simple. So the multiplier or divisor, multiplier or divisor, whatever, the multiple that we would use to see gold in relation to oil right now would be 1, because it's at the 200 exponential. If it was above it, maybe it would be 1.25. If it was below it, maybe it would be 0.75. So if it's over 1, gold is overvalued in comparison to oil or other assets. If it's undervalued, gold is, you know, 0.75. So it's, you know, it's a negative price correlation or lower valuation in comparison to these things. The same way we can look at oil. And that's why these 200 moving averages are so important, is because we can't always just look at the price of gold and say gold is at $1,800 right now. And, you know, in 2018, gold was at $1,200. So gold is very expensive right now. Well, we have to look at it in relation to what has happened with the dollar, the currency it's denominated in. What is the price of oil back then compared to the price of oil right now? Corn, wheat, soy, all these different things because of outside factors like inflation, cost of production, interest rates, all this stuff as well. So it's very important we pay attention to this. So as we see now, gold is basically pushing back up here and challenging that 200 exponential moving average, 200 simple as well. What is that telling us? It's telling us there's some sort of push up here, probably in my opinion, in relationship to oil. That's telling us gold is probably, if oil continues to go up in price, I think gold will continue to go up in price as well. Now, do I think gold is topping out here and it's going to sell off? Is there other factors that are stopping people from going into gold? Well, yeah, as long as we're in a risk-on environment, as long as people are speculating on everything, making money everywhere you can think of, it's going to be very hard for gold to go up here. So gold has one tailwind, in my opinion, the price of oil rising, but it has multiple headwinds, which is, basically rates and the DXY. As long as the DXY is rising, it means people are pulling money out of things to prepare or to later invest later on, or the dollar is in demand. Therefore, people are selling off things like their currency or gold or whatever, things that are easily liquid. And the same way that rates, as long as rates are low and the cost of money is cheap, people will continue to speculate on things, like tech sector and all these stocks and all this stuff will continue to be overvalued, and housing and all that stuff. Okay? So gold has a lot of headwinds. And right now, the chart doesn't look particularly great. You could argue that it's neutral because we're at the 200 exponential and simple moving averages, but they both have a negative slope. So if gold starts to close above 1800 and consolidate long enough, these slopes will flatten back out. And then sure, gold can go to the upside. And that's great. That's 100% great for gold. Probably not going to be great for other speculative assets and everything. A lot of the reason gold is under pressure and has been under pressure is because right now, there's no real uncertainty. Sure, there's some uncertainty. People might lose their jobs. The economy is kind of shaky. But we're still 100% risk-on environment, right now, as of now, around the world. How long is that going to last for? Probably not that long. And that's going to be a catalyst maybe for gold to break out. But right now, I still don't think gold looks particularly good. Now, we're going to start see maybe mining stocks has sold off a little too much already. They were hated. They were out of favor. So, they're not as desirable. So maybe mining stocks have more room to move up here. Sure, I definitely agree with that. Maybe silver or platinum or one of these other, similar metals will have a more parabolic move, etc. But right now, I really don't see it. Gold has pushed back up to the 21 on the weekly. It is above the 8 now, but they still both have, they're crossed to the downside. We do still have the 200 exponential above the 200 simple on the weekly. We did just recently get the hard buy down here at the bottom of the range. We have a red slope on the TJD TDMACD. We're still below the zero line, but they're approaching each other. So maybe we get a rejection like we did right here. Sell back off. Maybe we cross over right here and we start into a longer trend uptrend. And the last time that happened, was back here in January 2019, and we then went parabolic. That was from 1200 to 2000, and that lasted for, till we flipped the slope line back over. It lasted for, basically like 2 years. So 2 years and 66% increase in the price. Sure, that we're very close to potentially having that situation take place, or maybe even more. But we're also very close to getting a potential smaller rejection here again. Maybe we're going to come down here and retest the 200 exponential, as resistance. Are we in a situation like this where we're basically topping out and we get one more big push up and get rejected? Did that already take place and we're getting ready to roll back down here? We don't know yet. We don't know for sure. But we're paying attention to both situations, and we're paying attention to the risk reward of each. And then we're looking at not only the technicals, but the fundamentals as well. So is gold bottoming right now? Maybe. Is gold probably close to bottoming? Is there starting to look like maybe there is a bottom coming in? Maybe. But when we switch out to the monthly right here again, once we lose the 8, we come down here a few times, we retest the 21. This is the 2012 high right here. We bounce up, we put in a slightly higher high. This was our high. Then we put in a lower high. Then we come up, we take out that previous lower high. So everybody gets bullish on gold again. And then it goes into a, multi-year, at this point in time from 2012 till 2015, 2016 bottom right here. So, a 4-year downtrend on the monthly, 821 cross, gold loses from roughly around this area, 1750 till down here about $1,000. So gold loses 35% of its value, something like that. So we're at a decision point. We don't know yet. But what we do know is that the more times we bounce this 21 and the tighter this is where we talk about the moving average convergence and divergence, why the MACD is so important. Right here, we have throughout this range, the 8 is obviously more responsive. So it's moving faster away from the 21 as long as we're above it. So the moving averages are diverging. They're moving away from each other. And then once we reach this point up here, we stop moving to the upside. So the 21 starts catching up to the 8. So they start to converge again. And that's what the MACD is telling us. And now here we are, basically going sideways long enough that they're converging on each other. And if they converge long enough, we're probably going to break down from here. Because if we keep trying to move to the upside and each time we fail to move to the upside, we're probably going to eventually get the break and the cross and the capitulation event. Now, that is 100% a buying opportunity, in my opinion, for sure. It is definitely a buying opportunity. What we also see is the 200 simple is getting ready on the monthly to cross above the 200 exponential. So we're losing strength on the trend. Here we had the cross to the upside, extremely bullish. 200 exponential above the 200 simple, we go into a long bull market. And then it takes that entire bear market for basically the 200 simple to catch back up, including this little push up right here. So whatever happens now is probably going to be the trend that lasts for a long, long time. So if you ask me, is gold going to go up in value for the next, is 10 years from now, is gold going to be more expensive than it is now? Sure, it probably is. But we have to be very careful because something else could happen right here. Something else the chart is telling us is that we're potentially going to move that, like lose that trend. And here we are, you know, basically on the TJD, TDMACD, we have broken down below the slope line. We have all red histograms. We're below the slope line now. The last time that happened was right here. We had one more push to the upside, flipped the slope back over blue, and then we went into that bear market. You know, so again, we have to be very careful. Could we get another push up here and take out that high right here on the monthly? Could we get a push up here and, you know, this high is at 1900? Could we push back up to $2,000 on gold? We definitely could, and people would get extremely bullish then. But then could we immediately sell off and lose 35% of our value over like the next 6 years or something like that? And it turns out the whole system's not collapsing. Gold is all of a sudden not going to be in favor. The central banks don't want people going after gold. The manipulation has continued. Whatever the argument is going to be, that's fine. But pay attention because the chart is telling us something right now. Now, there is a 100% possibility we get a situation like this where it looks like we're going to break down and then we just continue up to new all-time highs. There is a 100% possibility. It is definitely possible. 100%. I will bet money. I'll go all in that it is possible that gold goes to a new all-time high and does not break down here. But I'm saying it's 100% possible. What is the probability of it happening? Well, we don't know. At this point in time, it's 50-50. You know, it looks like either one of two things is happening. We're in the middle of a consolidation or a bullish reset before we go to higher prices, or gold is going out of favor and it's getting ready to break down. I don't know which one. I don't see enough one direction or the other telling me, you know, that I should be piling into gold right now. Now, if the stock market crashes, gold will probably start to crash too and then start going parabolic if things don't recover quickly. If the stock market continues to go to new all-time highs, gold will probably sell off here and continue to go down. If oil continues to go up, gold will probably go up. You know, there's so many different factors though, because what happens if oil goes parabolic and the stock market crashes? What happens if the stock market goes parabolic and oil goes parabolic, you know, but governments ban gold? There's just too many factors to look at. So what we have to do is pay attention to what the chart is telling us, remove our biases, and say, okay, if we're not sure and we're at a pretty neutral spot, we're at the 200 exponential and simple moving average. So if you don't have any gold or you've been looking for gold, maybe you want to get some now because gold is fairly valued. You know, that's what I look at the 200 exponential and simple as. We're at the multiplier of 1. You're not getting a good deal on gold, but you're also not overpaying for gold. You know, looking back 200 days, if you bought gold right now, you're buying it at the average price. You're buying the average price piece of gold right now. If you buy it below this, you're getting a deal. It's on sale. If you buy it above this, you're overpaying for it. Sometimes it's worth overpaying for it. You know, like an area like this, sure, you're buying it above the 200 exponential and simple, but then it goes parabolic afterwards. Sometimes you're, you know, underpaying for it and you can buy it down here and you get a deal on it. Sometimes you're overpaying for it and then it goes down afterwards. But the fact of the matter is we're just looking at the average to see, is gold a good deal right now? Well, if we don't have definitive answer, it's going up or down, the chart's not really telling anything. We're in a consolidation period. We're not really like, I don't really have a bias on gold right now. So if you don't have gold, should you buy some insurance? Sure. If you do have gold, do you want to sell any right now? I don't think so. You know, maybe you do have gold. Do you want to buy more right now? Probably not. You're not getting a deal on it. I like to buy things when there's a deal. You know, I don't go to the car dealership because they sent me a thing in the mail that says, hey, we're running out of stock. Do you want to buy a car right now at 20% over book value because we only have so many left? No, I don't rush to a car dealership to buy a car. So why would I rush to an asset to buy into it? Only if I'm speculating someone's going to pay me more than that 20% in the future. If you get an ad from the car dealership and they say, hey, we've got our new models coming in and, you know, all of the cars on the lot are 20% off sticker price. Sure, I might go out there and check out what they have if I need a new car or I'm looking at one or whatever. So look at the 200 exponential and simple moving average as that. It's an advertisement from gold saying, hey, I'm 20% off. Hey, I'm, 20% overvalued, but things are looking kind of sticky. Better get me while you can. Right now, though, gold is just there, in my opinion. So I want to touch on gold. I want to talk about it. All of a sudden, gold gets a little candle like this. It moves up 2%, and it's like, gold, it's gold. Everybody's rushing to gold. We got to get our gold. Everything's going to crash. The world's going to end. Gold, get it now. Oh, my God. I don't see it. To me, gold just looks like it's existing right now. Silver next. So, silver on the daily, we're rolling over. We're in a bear trend. 200 exponential and simple have rolled over. We're at the bottom of this consolidation sideways channel that we've been at, trading inside of this range. We had a little breakdown from the range. We're trying to put in like some little inverted head and shoulders pattern, maybe not. Maybe we come back up to the heart line and then come back down. And it looks like a bigger head and shoulders. I don't know. I don't see a ton right here. We are back above the 8 and 21. It looks like they want to cross back to the upside. So I would not be surprised to see silver push up from like $23 to, maybe 25 or so. But the premiums on silver are still not very attractive to me. Eagles at $7 to $15 above spot. I would never buy an eagle right now. That's garbage. Historically, eagle prices are like $3 over spot. So I'm not going to pay double spot for something that is technically in a bear trend. Maybe you want to buy some silver because you don't have any. Maybe you like to buy some every month. Maybe whatever. That's fine. But you're paying a premium for something that looks bearish if you're buying silver right now, in my opinion. 200 exponential and simple have rolled over. Maybe we push back up. Maybe we get a reversion to the mean. And then you say, oh, I want to buy silver now. I want to buy it now that I'm not getting a deal on it and I'm paying an excess premium because it's at the 200 exponential and simple. Maybe you want to buy it now because it's slightly on sale and the little bit of a sale makes up for the excess in premiums. Because historically, silver premium is like 75 cents to $1 on just like regular old silver. So any deal you're getting right now on silver, in my opinion, is being eaten up by the greed of the middleman who are selling the silver. But that's not the fair value. Spot isn't real. Well, whatever. In my opinion, that's a greed of silver producers, and that's what's curbed the demand. The price of silver was this right here. The demand of silver was higher, so the middleman charged a higher premium, and that killed the demand. So the demand went sideways for months and months and months, and now we're back into a bear trend. Imagine if all the middlemen selling silver, all the pawn shops, all the online broker dealers, all them just charged the same premiums this whole time and just kept running out of stock. That would have caused the FOMO that would have made silver go to $50 or $100 or $500. So the same people that are crying about manipulation and complaining that silver isn't in a bull run, those middlemen, those sellers, those producers, those are the guys that killed the bull run. They destroyed the bull run. So the same guys that you see middlemaning silver, charging these premiums, complaining about manipulation, they are the manipulators. They are the ones that killed the bull run. So if you want to hate on someone, if you want to be mad at someone, you want to cry or complain or be mad that you didn't make your gains while everybody else got rich and you were all in on silver, those are the guys to be mad at. The same guys that are complaining about manipulation, they're the manipulators. They're the scumbags. They're the ones that killed the bull run. And that's a fact. It's an absolute fact. Because I guarantee you, if they never changed the premiums because they were afraid of running out of stock, and that's how they make their money is off the premiums. They make the spread. They buy it at spot value or, maybe 50 cents above spot, depending on what mint, or 75 cents or $1 or whatever. And then the premium is their cut. They make the spread between that and what they sell it to you for. So if they got silver for $20 an ounce, and then they turned around and put a, $3 premium on it, and they sold it to you for $23 an ounce, maybe that curbed demand. And they kept raising those premiums until they were able to catch up their supply with the demand. And by then, nobody was really interested in silver anymore. The movement kind of died. The FOMO kind of died. And then it rushed back into all these other speculative assets. So that's what happened to silver. That's what happened. It's their fault. It's these same guys who are crying about manipulation. They're the manipulators. So be very careful about that stuff. It cracks me up hearing these people cry. Well, there's no silver, man, the highest it's ever been, and they're manipulating it with the futures contracts, and it's paper. It's the paper silver. Okay, crybaby. You sure it's not you guys charging excess premiums that killed the demand? Because I bet on that. So here we have, once again, we could look at the weekly silver chart. Well, Silver actually came down to the 200, almost touched it perfectly, 200 exponential. And, it's potentially bouncing it right now. So what is this starting to look like? Well, maybe it looks like this. That was our retest. Maybe it goes back up, puts in another in a series of lower highs. So, does silver go all the way back up to 27? The FOMO hits in again. They start charging, instead of $23 silver with $3 premium, so it's 26 bucks, it's $26, $27 silver, and then the premiums are back at $5 or $7, and then once again they destroy the demand again, and then we go into a bear market. I don't know. We'll have to wait and see. We'll see how greedy they are and if they learned anything, but probably not. They probably did not learn anything. The bears are clearly in control. We're below the 8. We're below the 21. We're in a downtrend. We're losing the slope on the 200 exponential and simple. Still overall bullish on the weekly, but definitely looks like a consolidation or downtrend, without even taking into account the patterns. And then here is the most important. This is what I'm really paying attention to, the monthly. So we went into a monthly bull market back here in 2003, and that took us up to like $50 an ounce on silver by 2011. So that was an 8-year bull market with a pretty heavy correction about halfway through. After that, from the top in 2011 to our bottom CVD sell-off, or, you could count right here as a bottom or here as a bottom, or, that as a bottom with the wick on it, whatever. But if we say the top in 2011 and then the bottom was somewhere between 2015 and, 2020, you have like a 4 to, 8 year pretty much like bear market or so. Anytime in here when you bought, you got at a pretty good price, but 4 years of consistent like sideways to downtrend. And let's look at the signature on the moving averages. We're bouncing off the 21 repeatedly. We get the cross. We try to save the cross. It actually crosses negative right here. We try to save the cross. We top out at that same previous high, and then we go into a bear market and lose, what amounts to, from the top, $50 to the bottom, $13. So, lost 66% of its value. Is that going to happen again? Well, technically we put in a lower high, so this is pretty bearish looking. I don't know that we're going to see that situation happen, but I do know the 200 simple on the monthly is above the 200 exponential, so this trend is losing strength. I know we're putting in a lower high right here. I know we're below the 8 and we're below the 21, and it just so happens the 21 is where we're finding resistance. And if we spend enough time below the 21, these two are going to cross to the downside, and we're going to enter into, what amounts to a bear trend. Now, we'll still technically be in a monthly bull market as long as we're above the 200 exponential and simple. But, we got to be real careful here because this is starting to look bad. I mean, we notice here, once the 200 exponential crosses the 200 simple above the 200 exponential, we went into, what amounted to a bear market from 1987 till when they flip back to the upside, 2004. So 17 years of bear market in silver once the 200 simple crossed above the 200 exponential. Here we have the 200 simple crossed above the 200 exponential in 2018. So, is this going to be in a bear market till 2035? Well, what about all the demand for the solar panels and the EV vehicles and all this stuff? Well, ask Kathy Wood if she's early, because I definitely believe that we're going to have clean energy and electric vehicles and flying, helicopter drones that deliver our Amazon packages and automated trucks, and a taxi service. Like, I believe all this stuff. I definitely think it's true. And we're probably going to have some cool shit that nobody's even thought of yet. But is it going to take another, 10 or 20 years for that to happen? Well, probably. And this looks an awful lot like, that situation that happened. So we got to be real careful with these things, because if you're late, you're still wrong. If you're early, you're still wrong. If you sit your money in something that goes sideways for 15 years while everything else goes up, you lost. You're a loser. So we got to be real careful with silver. And I love silver. I have a bunch of gold and silver. I'm all about physical gold and silver. But to me, that's an insurance policy. It's insurance against the system breaking down. I don't buy an insurance policy and then go check the price of my insurance policy, once a month or whatever to see did I make or lose money off my insurance. No, the insurance is to protect me if something goes wrong. It is not a speculation. And that is the difference. And that's why silver and gold have nothing to do with Bitcoin. Bitcoin is nothing like gold and silver. Bitcoin is 100% a speculative asset. Nothing that goes up and down like Bitcoin could ever be a store of value. No, sorry, but no, it's not possible. And the same argument that people have for Bitcoin, Bitcoin is actually better than gold because there's a fixed supply of Bitcoins. and there's not a fixed supply of gold. Well, yeah, there 100% is a fixed supply of gold. There's only so much gold inside of our earth, in the oceans, in the dirt, whatever. And the idea of Bitcoin and mining is based entirely off the stock to flow ratio of gold, diminishing returns. And that's exactly what's happening with gold. There's a fixed supply of gold. We don't know exactly what it is because it's a real thing that's in the dirt, and we can only estimate how much there is. Bitcoin is, a computer program designed by a human being, so it's easily definable based on math. But the fact of the matter is gold and Bitcoin both have a fixed supply. So the X factor is, what is more likely to happen? Something goes wrong with Bitcoin's code and there ends up being more than 21 million Bitcoin, or an asteroid full of gold crashes on Earth, or we mine it in space. That's up to you. I don't know the probabilities on those things. I know they're both pretty unlikely. But I do know that the stock to flow ratio and the idea of Bitcoin and mining is literally designed off of gold. So it's a computerized mathematical version of doing what gold's trying to do. So, there's a strong argument to be made. But in the end, gold is not a speculative asset. Gold is a store of value. Silver is a combination of a store of value and a commodity that is used in production. So it's very important to understand the difference and how these things are relations. So is gold getting ready to go into a bull market? Is silver getting ready to go parabolic? I'm sorry, guys. I just don't see it right now. That could change very soon, and I would love for it to do so, but I just don't see it right now. So if you're in the comments right now, man, say what's up. Give me a hey or whatever. Give me your opinion. Is gold or silver going to fly to the moon? Make sure you hit that like button. Subscribe if you are new or whatever. But, I tell it like it is, guys. I love gold and silver. I'm all about gold and silver. I'm always accumulating, precious metals. And, I consider them to be a store of value or investment or whatever. But, when I buy them to protect my purchasing power. Especially physical. If I'm going to speculate on them for a short-term move or something like that, I do it through paper. So what's up, Bubblies? Good to see you, my man. Now let's look at the gold and silver ratio and see what it's telling us. Now I only really look at this on the weekly and monthly. I don't really look at the daily because it just doesn't tell me a ton. If we look at when did this cross into a bull market, well, technically we were above the 200 exponential and simple here. The 200 simple slope flipped about right here. So from 2014 till our top in 2020, 6-year bull market, where gold was gaining value in relation to silver. And then once this peaked, this was gold losing value compared to silver, or silver gaining value compared to gold. So once we bottomed out right here and crossed back to the upside, 821, we're now back at that historically, based on the weekly chart, the 200 exponential and simple moving average. What is that? That's the average price. So right now, when it was down here, I was saying, it's better to buy gold than silver because gold is undervalued. It's under the 200 exponential and simple moving average in relation to silver. Now we're at those moving averages now. So what's the better deal? Is gold the better deal or is silver the better deal? Neither one. Historically, sure, if you look at biblical times, silver was 20-to-1 ratio. Sure, that's fine. But if we look at this actual chart and we look at the actual, relationship between these two, the 200 exponential and simple moving average tells us what the historical, useful value based on the weekly chart is. And to me, it's 80 pieces of silver to 1 piece of gold. So we're technically still in an uptrend based on the blue slope line. We're seeing a little weakness. We're above the zero here, but we have some red histograms. We're getting the hard sell signal, leaving the bullish control zone. Am I getting bearish on gold now and bullish on silver? No, because we're at resistance. I would expect us to hit the 200 exponential or simple moving average and run into resistance here. And then I would expect to see that resistance look on the indicator oscillators like we're losing momentum, like we're slowing down. What we need to see now is what happens. Do we just consolidate here for a little while and then push to the upside further? I think that's probably what happens. Would I be surprised to see this hit here and roll over and then just, maybe go down to 20 and over the next 5 years or 10 years or 20 years or something like that, as silver goes into massive demand because there's not enough silver and everybody needs it for their batteries and their, drones and their solar panels. And I would not be surprised in one bit. I would not be surprised in one bit. But the fact of the matter is it's a weekly chart. So it's not just going to happen overnight. We're not going to be surprised. And it was like, oh, shucks, we missed our chance to get silver. And then if you're like FOMOing and you're like, oh God, what if it does? What if we just get a giant candle like this over the next month and I can't get silver or I can't get gold, or get some right now and then sleep good. Sleep well at night. But essentially what we're looking at here now on the monthly gold silver ratio is when we got that hard buy signal back here, and then we crossed the 821 to the upside, this was back in 2012, and we basically went in a bull market till 2016, sideways consolidation, bear market, whatever, till 2017, and then 2017 to 2020. So another 3 years, whatever. So now here we are, as long as we're on top of, we have the 8 in red, we have the 21 in pink right here. As long as we're on top of the 21, all we have to do is just go sideways, and the 8's going to move up to it, and then we're going to cross again. So are we going to go into a, another 4-year or 6-year or 10-year bull market on the gold-silver ratio? Is gold going to go massively higher compared to silver? Well, sure, maybe the central banks all want gold and they're having trouble controlling the price. Maybe the price of gold starts going up because the price of oil is going up, so it's forcing gold higher and higher. So all of a sudden there's more and more demand because people are buying into strength, and then next thing you know, we end up in like a 10 or 15 year gold market, and gold reaches all-time highs in comparison to silver. And then we get a wick like this, a parabolic wick like this, as central banks need to regain confidence from their citizens because they're hyperinflating all their currencies. So everybody runs to gold because they don't trust, their Zimbabwe / USD currency, whatever it is, Canadian dollar, whoever does it worse. Everybody runs to gold, and gold goes parabolic. And then all the central banks go back on a gold standard. And then, eventually they come up with a new IMF world currency, and then nobody needs gold anymore because we trust them again. And then, all of a sudden the silver demand picks up. So we get a peak like this, a blow off top, and then it goes down and we start crashing, and then we go all the way to 20-to-1 silver to gold ratio because now we need them for the drones and the EV vehicles and all. Sure, 100%. That's all totally possible. And you know what? When those things happen over the next 1 year or 2 year or 5 year or 20 year or 50 years, we can look at the chart and we can say, well, this peak right here was because of COVID and everybody was scared. Or we can say this peak right here was because of, the real estate crash and everybody was scared. And we can say the next peak was, well, this is because they hyperinflated the currency. This is because whatever. And we can say back here, well, this is because silver was in massive demand because of X, Y, Z. And then here, if we get a crush down, we can say, oh, this is because the drones and the EV and the solar panel. Sure, we can look back and say all that, but the chart will tell us far before that happens. And then we can look back at the fundamentals afterwards and say, oh, that's why that happened. But the chart tells us ahead of time. Because the smart money's ahead of the game. That's why it moves, is because the market makers. So it's very important we pay attention to all this stuff and don't lose sight of what's taking place. Because these little mini moves inside of stuff, have you FOMOing into something at the top, or, FOMOing out of something at the bottom. So platinum, platinum still looks terrible. Below the 200 exponential and simple. There's arguments that platinum's going to go away in the future because EV vehicles, and the main use for platinum is in catalytic converters, for diesel and regular vehicles. Palladium's been crashing lately, from its all-time highs. So maybe if palladium starts coming down enough, people will start using it again. Maybe if platinum starts going up again, people will use it again, or down again, or we can come back and explain all that stuff later on. Did this just break out because Janet Yellen's going to print $1 trillion platinum coin and we're going to hashtag mint the coin? Sure, maybe. Or maybe it just broke out because there was a clear resistance line here in yellow that we're paying attention to, and we put this trade setup in play, and it's hitting our trade setup. So, we can say, oh, this is because mint the coin. Or we can say it's technicals, and, we're just retesting the moving average. We're just reverting to the mean. We're coming back to a fair value for platinum. Platinum was undervalued right here when it was under the 200 exponential and simple. Now platinum's getting closer to fair value. If it gets all the way up here to the 200 simple moving average, we could say it's a fair value. If it gets up here to the 200 exponential, we'd say it's a fair value, depending on which one you're looking at. But the fact of the matter is, we're always going to be oscillating above and beyond these 200 exponential and simple moving averages. So is platinum a great deal now that it's had its little 8% move? Not really, but it's still a little undervalued. We can look at longer time frames and see the same thing. I'm not even going to bother because we're taking a long time explaining some of this stuff, but so let's look at our miners next. There we go. I see you guys. CW, what's up, man? Oh, yeah, for sure, brother. Good to have you in the chat. New Pathway, what's up, my man? Beauty, he says. CW, smash those likes. Hit them likey likes, my boys. That's right. Smash that button up, broskies. Broskies and lady bros. Actually, I'm pretty sure we had that one girl once ever and then scared her away. But, it's probably better that it's just the bros. It's just the guys. Yeah, and who knows? Maybe one day. I'll tone it down too, if we have children or women watching, but I'm just going to be myself in the meantime. So first Majestic, looking at the daily chart here, are these things starting to bottom out? Is First Majestic bottoming? Are the miners bottoming? maybe they're just reverting to the mean. You know, this thing has just entered into a confirmed bear market. 200 exponential and simple have crossed the downside. 8 and 21 are potentially crossing to the upside. You know, do we get that move up here to like $13.50 to like $15? Probably. You know, probably. You'll see how many times we basically revert to the mean, but technically still not great. You know, were these things just oversold? Did we just spend a bunch of time in the bearish control zone? You know, did we just continue to put in? We've been talking about this for a while. You know, the difference between the points right here and potential of bullish divergence developing between some of these points right here. So is this a surprise move? You know, we have a low right here, low right here. We have a low right here, low right here. So we have a lower low, we have a higher low. And then if we zoom in here, we'll see a low, a higher low, a third higher low, a low, a lower low, a third lower low, triple bullish divergence as discussed throughout the last few streams, well, last couple weeks. And now we're getting a push to the upside or a reversion to the mean off of triple bullish divergence. Not a surprise at all. That makes perfect sense. Perfect sense. You know, but what is that going to translate to? Well, it looks to me like a bounce off of the 200 exponential moving average on the weekly. A hard buy signal coming out of the bearish control zone. You know, potentially a bottoming pattern here on the weekly. And then, you know, is this thing getting ready to go into a macro bull trend for the first time? You know, we basically were in a massive bullish trend from 2008 up until, you know, what, 2011. And then bear trend, you know, reversion to the mean, overshoots the mean, back into the bear trend consolidation. And now we're back on top of 200 exponential and simple. They're sloped back to the upside. And this was our retest to see, does this bull trend hold or do we break down from it again? Yeah, we have to wait and see. But overall, right now on the daily and weekly, I'd say looks pretty bullish. But the monthly is what I'm worried about right now. We are below the 8 and the 21, and they're about to cross the downside. And every time that has happened, here when it happened, it was, let's do it the easy way. You know, here we lost 83% of the value, and it took us 458 days, you know, over a year to get back the cross back to 821. So 80-something% of the value was lost and over a year bear market. The next time it happened was right here in 2013. Again, 86% of its value was lost and it took 1,127 days. So, you know what, almost 4 years, 3 years, 4 years, you know, and 80-something% of the value, not good. Don't want to be there for that. You could argue that that's the only thing we're trying to avoid. You know, 46% right here and 700 days, 2 years. So if this breaks down right here, maybe it gets picked back up and we don't cross the downside and we go parabolic afterwards. But the potential, as long as we're underneath, you know, $13 or so, $13.50, something like that, we're in danger, in my opinion, of an 80% sell-off and, you know, a 1 to multi-year bear market. So, you know, again, got to be real careful with these miners and the FOMO and everything. Got to be real careful. So I don't know. I'm not saying these things have bottomed yet. Silver Juniors, this basically is just a first Majestic chart with a bunch of other junk in there too. It's like pretty heavily weighted into first Majestic. USAS, same thing. You know, this thing's been getting absolutely wrecked. Is it just going to revert to the mean? Well, there's definitely probably a trade in there. If I was going to take a reversion to the mean trade to the 200 exponential or simple, I would probably do it on USAS because we have essentially a descending broadening wedge right here. We kind of poked out the bottom of the wedge. We have a long-term support line right here going way, way back to 2016, bottomed out on the same line 3 times, now potentially 4 times. So each time it bottomed out, it came all the way back to our purple line, to our purple line, to our purple line. So if we're all the way at the bottom right here and we revert to the purple line, which I'm not saying we're going to do, but, you know, what is that move? 281%. You know, maybe we don't go all the way to the purple line. Maybe we just retest, you know, just a little reversion to the mean, back to 200 exponential or 200 simple. 90%. That's a dubski, a double up. You know, and where does that take us to? Back to the 0.5 of the macro fib retracement. So, you know, is that going to happen? I don't know. This thing looks terrible. But is it likely that it's just oversold and been getting absolutely wrecked and now it's just going to revert to the mean? I'd say there's a pretty good chance. I'd say it's 50-50. But you know what? If we look at it like this, which is why, maybe it goes up, maybe it goes down. But if we start looking at a risk-reward situation, damn, I thought if I put it up there, it wouldn't kill me. But if we start looking at a risk-reward situation, maybe pull it down here and take a look. Well, if we continue to go lower, 20% stop loss, take out the low, continue on. I'm not interested in this trade. I'll wait. If, we push back up here, 93% reward. So, 20% risk, 93% reward, 4.7 to 1 risk reward ratio. So if it's 50-50, would I take that trade? Yeah, I think that's probably a good trade. Because if you lose 20% and you gain 90%, but it's a 50% chance that you're right or wrong, you're risking 20 to make 90. And that's what this is all about. That's what my strategy and risk reward and all that stuff, probability, whatever is all about. Now, the probability of success, I would say, is less than 50% because we're below the 200 exponential and simple. So we're in a bearish trend. So if we're below the moving averages, the probability of a move to the upside is less than 50%. But a reversion to the mean, I'd say, is probably still somewhere around 50%. But we're catching a knife right here, And again, we're looking at bullish divergence here. We're looking at, key support levels. Something like this, again, 20% risk, 247% reward. Well, that's a 12.5 to 1 risk reward ratio. Are we going to do this? Are we going to get back to the top of the range? I don't know. I don't know we'll ever get back to those prices. Maybe this company goes bankrupt. Maybe, it turns out to be some Ponzi scam. Maybe somebody else buys it. I don't know what's going to happen. Maybe that's actually why it goes back to $2.75. Somebody buys it. I really don't know. But the fact of the matter is, I know a 12 to 1 risk reward ratio on something that has happened, the first time it did it, that's 1 time, 2 times here, 3 times here. The probability of success a 4th time, I would say, is pretty good. So if it's a 50-50 because we're in a bear trend, so it's bearish, it's less likely to happen. It has happened 3 times in a row, so it's more likely to happen. A reversion to the mean is pretty highly likely going to happen. So if it's still 50-50 and it's a coin toss, if I bet you $1 if it lands on heads and you get $1 if it lands on tails, you want to take that bet? Yeah, maybe, if I'm bored, if I feel like gambling. But if we flip a coin and I say, look, I'll give you $1 if I'm wrong, but you give me $12 if I'm right. If we bet right now and I say, look, you get $1 if I'm wrong and this goes lower, I get $12 if I'm right and it goes higher and hits my target right here. That's a pretty juicy bet right there. It's still 50%, like we said. 50% it's heads, 50% it's tails, 50% it goes back and does the same thing again, 50% it just keeps going down lower. Whatever, maybe it's not 50%. Maybe it's 60-40, but at 12 to 1 risk reward ratio, this is a golden trade to me. So that's what I'm paying attention to. Does it have to happen? No, it could easily just go to 0. Is it worth taking a shot at? I think probably. And I'll be real with you. This is like the type of thing I look for. My goal is to find 10x's. 10x. If I can put 1,000 or 10,000 or 100,000, whatever your denomination, $100. If I can put that amount somewhere and there's a legitimate possibility, not just some moon boy dream, that I can 10x that investment, that money, I'll make that investment 10 different times on 10 different assets. And if I succeed, and think about it. If it's over a 10 to 1 risk reward ratio, and let's say I have $1,000, I put $100 on 10 of these bets, and each one has a 10 to 1 risk reward ratio, and there's a 50% or 40% or 30% or 20%, how many of those do I need to win on to break even? If it's a 10 to 1, if I put $100 here and that $100 10x's, and then the other 9 places I put $100 all fail, I'm right back where I started. I still have $1,000, which is what I started with. But if 2 of those succeed, I now have $2,000. I doubled my money, and the other 8 failed. But what if I go 50-50? What if I put $500 out and that $500 10x's? So now I have $5,000 from my $1,000. I 5x on everything. What if I get lucky in 60%, 70%, 80%? What if they all go 10x? Not likely to happen, but it's possible. That's how you legitimately gain wealth. That's how you really make money, is finding these asymmetric risk reward ratios. And that's my problem with crypto and Bitcoin and stuff right now. When it was at 3, 4, 5, 8, 10,000, the risk reward was great on it. Asymmetric returns for sure. Now, it's less. You know, Bitcoin's over $50,000. So a double is $100,000. Do I think it could go to $100,000? Sure. In a reasonable amount of time? Sure. Do I think it's more likely to go to $100,000 or to $25,000 right now? I don't know. I mean, I don't know. The risk reward is not that appealing to me. The probability of success to 100,000 versus the probability of failure to 20,000, it's not that great to me. You know, so that's why I'm just not that hype about crypto right now. Like, you know, and with crypto, it's like the worse something is, the shittier it is, the more speculative and useless it is, the higher the supply and the lower the price, the more likely it is to move. That makes no sense. The whole argument behind Bitcoin and the reason that everybody wanted Bitcoin so bad, and it was such a compelling argument for me personally, is there's a limited supply and, you know, stock to flow ratio and, you know, digital store of gold and, you know, trustless transactions and backed up by math instead of corrupted by men. Like, you know, there's a lot of strong arguments, but the fact of the matter is through the last like year or so, especially, but really the last few years, the argument has been corrupted. It's no longer useful for transactions, really. The store of value argument is kind of like meh right now. The worse a crypto is, the higher it performs, the better the value. Dogecoin, top performer. Shiba Inu, top performer. Vaporware, Crypto X, top performer. You know, I mean, I don't know. You know, I still love crypto. There's still potential. Blockchain technology, like, definitely still the future. It's definitely, you know, Internet 2.0, all that stuff. Sure, I totally agree. But right now, the asymmetric risk reward is just not there for me. So let's look at our pot stocks next. You know, and you could just put gold, silver junior, gold major, blah, 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 any of those in there. You know, and we're seeing the same type of moves, potentially bottoming patterns. Pot stocks still don't look great, guys. Tilray about to break under $10, about to lose the slope on the 200 simple right here. You know, we go to like, let's just skip over to the monthly chart. You know, basically a hard rejection off the 8 and 21. Selling back down. Is it probably going to go put in some kind of bullish divergence? I think it will. Is it going to do it anytime soon? I don't see any signs of life out of these things. You know, we're in the bearish control zone. Bears are in control. We lost the red slope line on the weekly. You know, we had from $4 till $62. That was a nice little like bull market. Or arguably, you know, $7 to $62 or $7 to $31 or $7 to $18. However you want to measure it, you know, when the trend was good, it was good. But now the trend is bad. The bears are in control. You know, we're back at support. Could this be the bottom? Are we getting ready to bottom out here? Maybe, but I don't see it in the charts. I don't see it in the charts right now. You know, you could start looking for, you know, some divergence or something, some momentum or whatever. But the truth is, I think it would just be a short little play up to like the reversion of the mean. You know, could that be a 40% move for Tilray back to the 200 exponential or simple? Sure. But again, I just don't see it right now. Doesn't look that great to me. Acb Aurora, again, very weak. 200 exponential and simple, slope to the downside. Leave the bullish control zone. You know, hard sell signal, fast approaching. You know, can barely hang on to the 8 and 21. You know, can you get in here and scalp something and make a little like 10, 20%? Sure. But, you know, I don't like to call the bottom on things, but you're not going to find an asymmetric risk reward ratio on something like this if it still looks heavily weighted to the bottom. Now, look, on the weekly, if Aurora decides to, you know, revert to the mean and push up here to $24, that could be epic. That could definitely be epic. You know, and I'm paying attention to, you know, the low, the higher low, the higher low, you know, third drive potentially. Here we have the low, a higher low, and then a lower low. So are we starting to see maybe some bullish divergence developing between these lows right here? You know, are we starting to see potential that the histogram can regain the slope line and cross above the zero and this thing can start pushing up here? Sure, definitely. But you know what? I'd much rather wait until we see the 821 cross back to the upside right here. I really need ACB to get above like $7.57, $8. And then I start looking for, you know, basically a move from $8 up to like $22, $24, something like that. You know, a 3x. you know, maybe up here to, you know, $45. You know, there's definitely a possibility. There's definitely some bullish signs showing up. But again, you know, when we take into account risk reward, probability of success, you know, time value of money, all these different things, you know, is this thing bottoming off that previous high right here? Are we starting to see potential? Yeah, there's potential, but just not quite there yet. When these things bottom though, I'm all about it. I mean, look, realistically, this thing's been in a bull market since June of 2019. Bear market, sorry. June of 2019. So if we just get back up here to like 878 and reclaim the 200 exponential on simple, and the slope flips back over a blue, and we start pushing back to the upside, this thing's going to look super juicy. It almost did it back here, you know. So definitely paying attention to these pot stocks. And that's why we look at them every day. That's why we look at them, you know, every week, and we talk about them, and we look for lows, and we put out these targets and everything. I'm looking at these because I'm interested in them, but not yet. Not yet. CGC, canopy growth, and we might miss them by a couple percent here at the bottom, but we're going to capture the majority of that move. We're going to get that 10x. We're about to get that Graham Stephan. No, that's not the right one. What's his name? Who's that 10x dude? Mr. Hype. Oh, I can't remember. Damn it. Wrong guy. You guys know who I'm talking about. The old 10xer bought the jet, tried to fight the Wolf of Wall Street. CGC. Canopy growth, same thing. You know, potentially getting ready to carve out a bottom here, but just not quite there yet. Not quite there yet. And I have a couple other of these pot stocks actually that are going to be into that member exclusive, the 10x. I basically have like 10 different assets in a couple different spaces that have potential for a 10x, and it's like they're all under $10 a piece. So they're all stocks under $10 that have a likelihood to 10x reasonably. And I'm going to make a video on that for the members, basically talking about all of them. And a couple of them I talk about on here, actually. USAS is, you know, potentially one of them. Maybe, maybe not. You'll never know. Unless you're in the group, then you might. You know, and there's a couple bonus ones in there too that I'm looking at but didn't quite meet it. You know, and they're not just like 10x, like, oh, Shiba Inu is maybe going to 10x. No, it's based on actual like technicals and like company fundamentals, like, you know, balance sheet, like, you know, debt to asset ratio, like potential in the actual charts, the space that they're in, you know, etc. So it's not just some like FOMO coin where I'm like, Cardano could go to, you know, $50, or XRP could become the world reserve currency and go to $50. So that's on the list. No, it's not. Sorry, XR penises. Sorry, boys. Didn't make the cut. So CGC on the monthly, you know, I don't like this. I don't like that it basically is at or below the previous all-time low. Maybe it bounces this, and then this is it, and it puts in a floor right here. But we're going to know real soon. We're going to know in 2 weeks. If this thing puts in a lower monthly close, you know, it's going to look like free fall to me down to like $9. So we'll see. You know, is it maybe carving out some bullish divergence right here? Maybe. Too soon to tell, though. Too soon to tell. Because if we just see continuation on this, and then we see continuation on this, there's no divergence. It's just continuation. But the 821 have crossed the downside. This one has the longest history of like any of the pot stops we look at. I do not think it's unrealistic to think this thing's going down to $9. So, you know, and this was our previous top right here was $9. The little wick down here was $9. So one more push down here, maybe even a lower close, and then we get some bullish divergence, and then we bottom out at $9 and go back up. Sure, maybe. Maybe. We're watching it. Hey, maybe it'll make the next list once it's $9. Can make that 10 under 10. Uranium, looking strong. Maybe uranium's going to be the one that pops off. You know, uranium, obviously, energy, clean energy, you know, commodity, directly related to oil prices. The more expensive it is to get uranium out of the ground, the more expensive the uranium needs to be for it to be worth getting out of the ground. You know, this is a dormant industry that has been unloved, unliked, unwatched, untalked about, you know, out of favor of the masses forever. People talk about silver is the only asset in the whole world that's still good, that's under its previous all-time highs. All other assets are overvalued. Well, this is URA, obviously, uranium ETF, but, you know, the price of uranium is still under its previous all-time high. It's still, you know, 50% of its previous all-time high. Many of the uranium stocks are much, much lower than their previous all-time highs. This previous all-time high was $128.25. Let's say 125 back in 2011. This was $125. Now it's $28. So you could argue that this is just as undervalued, if not more, than silver. You could argue that they both have, clean energy potentials in the future, strong fundamentals and technicals. You could argue when the 821 on the monthly crossed over on this at $12 is when I got extremely bullish and invested in uranium stocks. You could argue that no one even knew what uranium was back then, and now all of a sudden everybody's talking about it. But we got to be careful too, because we're at resistance, potentially topping out, so we'll have to see. We're at sketchy little areas right here for uranium. But this is my favorite kind of chart. One that just died forever, but is an actual useful thing like a company. And now it's back on top of the 200 exponential and simple. Tried to come down for a retest, putting in, potentially like cycle highs right here at resistance. So when this thing starts to sell back off, or if it starts to burst back to the upside, I'll either buy into momentum or I will accumulate, on a pullback. I still obviously have uranium positions, will never be out of those because long term I think this is one of the most profitable plays. But right now, you guys know obviously what we're paying attention to here. We got our pullback within like pennies of the entry for this move right here. We've now completed the initial move back up to the 0.5. Next target, if we continue up here, is going to be up to the 0.618 at $42. So, we'll see how that plays out. Overall looks great. But after a strong move like this, after being unloved for so much time, I always expect, a little bit of a cooling off period. Because right now, uranium's cool again for the first time ever in a long, long time. So, and again, on the monthly, crossed over at like $12 here. Looks great, but looking a little tired. Bullish control zone, looking strong. We'll see. We'll see. UEC, same thing. All these uranium charts pretty much look the same. UEC obviously got a nice pullback to the 200 exponential and simple. Should have been used as a buying opportunity. Obviously, could easily get a little sketch consolidation type thing like this. But, once again, unliked, unloved. This one's not quite as undervalued. 2006, the all-time high on this was 2007. Sold off pretty heavy from there and kind of doing its thing. You got to be careful with some of these, smaller companies or miners or whatever. Look into, I think, same with silver and gold and uranium and all these things. You got to really look into them and make sure you're not just buying something that has a pretty name on it, but is not like a legitimate company. Miners are a lot like cryptos. They can go parabolic without any actual like company or usefulness or anything, just by sounding good on like a white paper. So got to be real careful with them. And that's why some of these, the like silver junior miner ETF and stuff like that, SILJ and URNM and some of these other ones are better. If you don't know and you're not going to put in the work, in my opinion, sometimes it's really worth going ahead and getting into an ETF. So you can get some of the bigger ones, some of the proven names, some of the ones that have actual, you're basically paying a small premium to somebody else for doing the work to pick out some legitimate ones and then a couple like kind of speculative, but still kind of legitimate ones. And, it's worth it a lot of times if you're not going to put in the work yourself. Something like Cameco, obviously much more established name, legitimate mines, like nice little history, little better. This one you can go back to obviously 1996. And again, previous all-time high 57, now it's at 25, still 100% off of its all-time high. So, but now it has reclaimed the 200 exponential, reclaimed the 200 simple, closed at the 200 simple here, like we discussed last month, was able to consolidate at this level. Looks like this thing wants to just go back up to all-time highs again. Uranium looks very bullish right now. I don't know that we're going to get the pullbacks that we're hoping for. We may have missed the boat on additional accumulation opportunities. So, URNM, this is the mining ETF, hard buy signal. Again, these charts are like all the exact same. I like Cameco because it has, better history. This one's obviously very new. You know, depending on where you're at or your capital or what you have access to, you know, the spot fund. There's lots of potential in this space. Something like copper, again, you know, and we talk about this commodity bull market, you know, a long time ago on this channel. Before anybody else was talking about commodity bull markets, everybody forgot about commodities. They were the most useless things to own for 10 years, 20 years, whatever. And now that we've had this massive parabolic move, everybody's all about commodities. You know, this is like, I like things when they're unloved and untalked about and unpopular, you know. I like those old movies from the 90s where they take the girl actress who's like already hot, but they like mess up her hair a little bit and put her in like some baggy clothes and like don't put any makeup on her. And they're like, oh yeah, this just regular ugly girl that nobody likes. And then all of a sudden they like give her a makeover and she starts like hanging out with the cool kids. And then like all of a sudden she's like supermodel hot. That's what I like. I want those uranium 90s girls that look like meh, and then like, you know, spice them up a little bit and then they're hot. Now this is the hot girl. Now you're buying the hot girl that's popular, that's hanging out with the cool kids. That's what you're getting up here. Well, you could have just got that back here, you know, from somewhere else. That's how I look at these things. I want them when they're unliked, unloved, unpopular, and then you get to ride the wave up, and then you could just, you know, dump them and grab up another one somewhere else. So, you know, I guess that's a bad analogy. I don't mean to like womanize or whatever, but you know, it's not my fault. Those movies from the 90s are all the same. Also, we have like a W bottoming pattern right here. That's like our V neckline on copper. And then what happens, you know, we get basically what amounts to, you know, the measure move from the bottom of the range to the, oh, it's already on there. I guess I just, you know, that was our move. We literally called this exact move back here, you know, in November 2020. This was our move, the breakout, the measure move. We hit the target literally to the T within $1. That was our top. You know, sold off, came down to our accumulation buying area perfectly again, got to push back up. Do I expect this to just put in a lower high and sell back off? We'll have to wait and see. Probably will, though. It probably will. You know, much like what lumber's doing right now. It's pushing back up, but it's probably going to roll back over and top out. Hard sell signal on the monthly, rolling over. Again, you know, she was that art student that nobody paid attention to with the glasses and no makeup and, you know, the smoking hot bod, but it was covered up by baggy clothes, and now everybody knows about it. You want to pay top dollar for that little hottie, or you want to wait until she's back down here again? I don't know. I mean, hey, you tell me. Lithium, LIT, again, you know, ETF. If you don't want to spend the time, you don't want to put in the work, you don't want to figure out the exact companies or look into the fundamentals, all this, you know, what do they actually have versus what do they say they're going to do, etc. You know, something like this, not a bad idea. Looks like we're about to get the 821 cross back to the upside. Is this thing overvalued? You know, has it moved up a ton recently? It's the same type of thing for me. You know, this thing's gone absolutely parabolic. Everybody's talking about lithium and nickel and cobalt and copper, and just not, it's just not the time for me for a lot of these things. The hydrogen ETF, after we put in the low, back up here, just going to oscillate inside the range again. It just looks like a giant megaphone pattern, you know, ascending broadening wedge. Left a nice little gap right here. But again, you know, is this like a tradable range? Let's say we bought the absolute bottom of the wick to where it's at now. 18%. Sure, that's not bad. That's not bad. But, you know, there's no actual, like, useful history on this. I really like the idea of all these things in the future. I think hydrogen will be one of the winners in the future and definitely a type of thing to invest in. But I just don't know that now is the best time to be buying into some of this stuff. Are you suggesting that we look for... Are you suggesting that we look for hotties at Weight Watchers? Hey, I mean, maybe, man. You got to be careful, though, because those stretch lines, man, they don't ever go away. Baggy clothes and glasses is a little different. You got to be careful. You know, maybe like a little rat's nest hair. What's up, Harold? Good to see you, man. Hey, thanks, bro. I love my PC. Don't get me wrong. It's the only good thing that Corsair ever did was make this PC. I'm just kidding. Corsair stock just been getting roughed up. And some of these parts are from Newegg also. So you could argue that once I buy something from a company, it turns into a meme stock and then crashes. So careful if I go to AMC, guys. I don't want to hurt the apes. LBS1, lumber. You know, everybody's like talking about lumber. Lumber's going back up. It's going parabolic. Well, how long ago did we talk about this? This has been on our chart forever, guys. Before we even bottomed out right here, we were talking about the potential of the Head and Shoulders. What did we get? We got the 40% move up. We almost completed our second move, 76% on lumber. And what is that going to do? Reversion to the mean, 200 exponential, 200 simple. What was this? Reversion to the mean. We overshot the average, went down low, bottomed out on our Fibonacci levels right here. We are reverting to the mean right now. Maybe we even overshoot it to the upside. Maybe we can't get above the 200 exponential and simple. But I'm going to tell you right now, if we start to top out here between $800 and $900 and then sell back off, this is going to sure look like a giant Head and Shoulders pattern to me. And I'm going to be real cautious about lumber. You know, and what is this going to line up with? Well, by the time this happens and we start selling off, you know, we're in the winter months and the demand's dying. And then all of a sudden the economy's not looking so great and it's catching up to people and nobody's building and house prices are crashing. I don't know, you know, but I can tell you the chart is telling us that something's up here and has been up. You know, we didn't just get lucky on a 76% trade setup right here. That wasn't just random luck. It's reversion to the mean. Same thing over and over again. Same strategy, same way of trading, same targets, same fib extensions, moving averages, momentum, oscillators, and indicators. Same thing over and over again. So sometimes I'll look at something and say, I don't particularly like it. You know, and there maybe is a trade set up there and then it plays out. And then people are like, damn, I should have took that trade. Or why didn't you take that trade? Or man, you talked about it, but you didn't do it. Well, because there was probably another girl. There was another girl that looked just as pretty if you, you know, look past the hair and the glasses and the, you know, Motley Crue t-shirt or whatever. You know, clean her up a little bit, and she looked a little better. You know, we don't need to pick up every one of them. We just look for the best one. You know what I mean? Maybe one had like a little wart on her face. Other than that, she looked pretty good. Maybe one was looking a little bit dumpy. She's looking a little dumpy. I'll go for this one over here. Maybe she was, you know, a big Bernie supporter, and you're like, I'm not really interested. Bernie Sanders, not my kind of thing. Maybe she was a little woke. You know? I don't know. Maybe she shaved her head for some weird thing. I don't know, guys. You know, we're just looking for the best one, the one that has the most potential and likelihood of success. Maybe she has some like unstable emotional something or another. I don't know, guys. Caterpillar. So again, looking at some of the industrials here, you know, below the 200 exponential and simple, potential like bear market starting right here, breaking down from our long-term ascending channel right here, you know, already hit the measure move, broke down below the moving averages now. You know, this thing is likely to enter into free fall. Do we get the reversion of the mean? Potentially, but you know, it's just a scalp play. You know, we're just scalping the move back up. And on this, the percentages just aren't there for me. You know, if this thing just lets go, it's going to get crushed. Same with deer. You know, and then you could argue deer on top of that has been staying more bullish. You know, but this just looks like a double top. This looks like a rounding top to me. This looks like a little more of like a pointy top with an inbuilt double top. So is this just an Adam and Eve double top? And then we're going to break down from here? After we broke down from our long-term channel, after we broke down to, you know, the 200 exponential and simple, and then we get the measure move of the double top down here and the break of the actual channel itself, taking us to the same area. You know, I'm going to be interested in this at about 250 or something. And then on top of that, now you got John Deere employees striking, you know, all this bad publicity. Maybe that's the catalyst that pushes it down. And they're like, oh, John Deere only sold off because the strike and they weren't treating their employees right. Sure. Or maybe the chart's been telling us it was going to break down forever. And it just so happens that they're striking. Or it just so happens that, you know, whatever. I don't even need to watch the news. But it's certainly interesting because I have a feeling Deere is going to fulfill that move now that we've been waiting for a while. And I'll be there to swoop it up because I think long term it's going to do well. And again, that's another one we look at. You know, how is oil prices going to affect that? How is the cost of labor going to affect John Deere? If they have to pay all their employees more money, if they have to pay more for oil to manufacture their tractors, or people have to pay more for the diesel fuel that they put into their tractors or farm equipment or whatever. Well, is that going to be compensated adequately by like the actual farm equipment increase in price of the underlying good, like the corn or the wheat or whatever? Are people going to keep buying tractors, or are they going to buy less tractors if commodities are more expensive? If commodities go up in value, you would expect, you know, a wheat farmer, a corn farmer or whatever to want to make more commodities to capitalize on the increase in value. Therefore, maybe they're willing to pay a little more to John Deere for a tractor because John Deere has to pay more for the oil to make the tractor, or the steel to make the tractor, or the semiconductors, or the employees, or the taxes, or whatever. But what is that going to do to John Deere as a company? Is John Deere going to be more or less profitable if their input costs go up? You know, if their labor goes up, if the oil goes up, if the steel goes up, they have to then pass all those prices down to the end consumer, the person who's going to buy the tractor. And then that person who is going to buy the tractor has to want to still buy as many or more tractors. So the relationship between the increase in costs, the increase in taxes and labor and all that stuff has to be offset by the raise in prices, but still not be a raise in prices so high that demand goes down. Because if they have to double the price of a tractor, and then the same number of people buy those tractors, John Deere still going to be doing fine. But if they double the price of the tractor and then only, you know, they were going to sell 1,000 tractors and now they only sell 200 tractors, they end up losing money. And I'm going to tell you right now, if you look at John Deere, if you look at Caterpillar and you look at their balance sheets, they're like debt to asset ratios are like over 75%. That's fucking ridiculous. Money is free. And the demand for these things and this commodity bull market and industrials, and they're going to build all this stuff and all this infrastructure. And like at no point in time did these companies like shore up their balance sheets. Like, what the fuck are you doing? Who's running these companies? It blows my damn mind. It blows my damn mind. How, I was looking at them the other day and I just like, honestly, like let out like a verbal sigh, just like, oh my God, absolutely pathetic. All right, so Antero Midstream Capital or Corporation, AM, still looking pretty decent on the daily. Got a nice bounce off 200 exponential, losing the slope a little bit, or the 200 simple is above the 200 exponential, so losing a little bit of the strength here, but still overall looks good. We're at a clear resistance based on these previous lows back here from like 2019, but I still think this setup's going to play out. Once we took out this high right here, I really do think that this is going to keep pushing up here. Again, not the most, well, you could put in a way better risk reward ratio now, but even the one that we had in play right here was a 2.5 to 1, 25% move to the upside, 9% to the downside. But in all actuality, you could basically, I don't want to alter these just because this is my actual trade. Well, I'll mess with it for a second, then I'll just undo it. If we look at like, if we break down from this key little support cluster right here, and maybe we want to take out and then re-enter at a lower price. So 7% stop loss. But again, our target still being a move back up to that 786, 20% move. So again, over like 3 to 1 risk reward ratio. So yeah, that should be good. Okay, yeah. So I mean, definitely still some potential here on this one. Losing a little bit of strength here, but again, looks decent. Still obviously in a position there. Cemex, same thing, still in a position here, but not looking nearly as juicy. Broke down below the 200 exponential, broke down below the 200 simple. I took profits on part of this position already. I mean, you guys know that though, obviously. But we broke down from our giant ascending channel right here. And that's where I got bearish, was on the retest of the channel and the lower high back here. And then we started forming this descending channel right here. And now again, measure move of the breakout of that ascending channel would take us down to like $5. I don't know that we get there for sure, but I'm paying attention here as of now, we're below the 200 exponential and simple. We've lost some key levels of support. I think if it continues to push back up here, we reclaim like this $7.30 range. But at that point in time, got to be real careful too, because it's, a lot of this support's going to flip into resistance at that point in time. And, I would expect this to sell off further. We did not make it down to the 236. So technically, until we get to the 236, this Fibonacci is not like a valid swing. So we'll see. I think it probably gets there though, but we will see. Again, it depends a lot on the infrastructure, and how it gets used. I mean, I think they're primarily like North America. I think it's Canada, Mexico, USA, like one of the top, if not the top, cement producers. And think about cement. It's not the type of thing like a semiconductor where you can build it in Taiwan and ship it somewhere else. Like, it needs to be like somewhat local. If you're going to build something in North America or Mexico or something like that, you're not going to buy cement from China. You're going to get it like locally. So, maybe this is telling us infrastructure is not going to happen. Maybe it's telling us the economy is not going to be that great. Maybe it's telling us that the infrastructure bill is going to get passed, but Nancy Pelosi is going to funnel it to all her friends, and they're never actually going to build anything. I don't know. We'll see. I'd say there's probably a 50-50 chance that Pelosi, I'm sure, look, if you guys hear Nancy Pelosi buying calls on Cemex, okay, millions of dollars worth of calls on Cemex, I think it's probably a good idea to ride those coattails, because Nancy is one of the best traders in existence. I think she made something like 300 million over the last 10 years, not using insider information at all. Wink, wink. CLF, Cleveland Cliffs, again, we're looking at this steel. What's going to happen with steel if oil prices go up? Is there going to be enough demand to offset those? Can they pass on the prices to, the consumer? Is American-made steel going to come back in style? Are we going to go into a trade conflict with China? There's so many factors outside of this. What is your chart telling us though? We should technically still be bullish on this. It is losing strength because its 200 simple is above the 200 exponential. It is reclaiming the 821, potentially trying to push back up here to the upside. Bunch of green histograms, hard buy coming off of support, starting to build some momentum back to the upside. We look at our drawing tool, same thing though, same chart. Broke down from a key channel, hit part of the measured move, came back up, retested the channel, but put in a higher high right here, which a lot of times results in some kind of divergence. Sold back off, reclaim this area. But, for now, can't argue that this thing is topped out. Not quite yet. I thought I might have deleted that one, but arguably this thing would have to hit the measure move, which would take us down to the 236 before we could really start using that swing, or that Fibonacci. And that swing high as a potential target. So we'll see. Again, there's a lot of headwinds, there's a lot of tailwinds. We just really have to wait and see what happens with all this stuff. But we notice, obviously, all these industrials are pretty much looking the same. But how is the steel industry going to react to higher oil prices? Maybe I'm wrong. Maybe oil goes back down to $20. Maybe it goes to $12, and Cathie Wood can, dance on my stock portfolio as I get absolutely wrecked, and she kills it. Maybe, but maybe. I'll apologize to Cathie. If oil goes to between $3 and $12 a barrel, I will legitimately apologize to Cathie, and I will take her to dinner. But if I'm right, what are you going to do for me, Cathie? It's your old ass. Ford, looking okay. Retesting the highs right here. Nice bounce off 200 exponential and simple. Again, losing some momentum to the upside. A lot of this was... a lot of this rally right here was talking about the EV, whatnot, if you're in a union and you make EVs, we're going to help you out. And then Elon Musk is crying because nobody likes Tesla and the U.S. government's being mean. Well, Joe Biden's a union man. He used to work on the railroad, or maybe he doesn't remember what he used to do. I don't know. But the fact of the matter is, Ford and GM both looking okay here. Still have positions for now, not in GM, in Ford I do. Again, looking kind of weak right here, looking okay, but, realistically losing some momentum. Hasbro, this is another one. The news, the news and the charts. Okay, so what's going on here? We talked about this breakout right here, how I didn't believe this breakout. To me, it looked like a throwover. It looked like it was going to be a failed rally. And then look, it failed, broke down here, rallied off the 200 exponential and simple, came back up, could not get above that key Fibonacci level. They was having so much trouble getting above all of 2021, just trading sideways. That Amazon throwover, you know what I mean? That failed breakout right here. And then what happened here? Starts to break down below the 200 exponential and simple, loses the slope on it. And now look, the Hasbro CEO has left for medical reasons. And, RIP, man, rest in peace, my dude. God rest his soul. I heard he's a great man. I don't know him. I don't know anything about him. But, now we're breaking down the 200 exponential and simple. The 821 is crossing. We're losing these key levels. We're breaking down from the blue support right here. And, did we know the CEO was sick? Did we know he was going to die? No. But the chart did. Somebody knew. Was it insider trading from Hasbro? Was it his family dumping stocks to pay for his medical bills? I don't know. We can speculate on all those different things as much as we want. But the fact of the matter is, without any of that information, the chart has been telling us this was going to break down. And now it's probably going to get worse because there's probably going to be uncertainty within the company. Maybe somebody else steps up as a CEO. Maybe there's some kind of confusion as to what direction Hasbro is going to go in. Maybe something happens with the toys. They can't get the toys off the ships. The movies aren't working. Like, whatever Hasbro is trying to do over here, this chart is telling us that this thing is weak. It topped out back here in 2019, bottomed out way, way lower in 2020, and then reclaimed that level back to the 786 perfectly. So a breakdown here, very likely going to take us down to the 618. Previous support, all through here, all through here, all through here. Very, very likely Hasbro coming down to $82. But at that point in time, then what's going to happen? Well, probably bounces 82, comes back up, retests like 89, or maybe as high as 93. Depends how long it takes to get there, but that's the area we're going to be paying attention to next. This is our area of interest right here. We're almost there. We're already almost there. And then assuming it continues to break down from there, we'll be looking at the 0.5 down here as well. That will be our next target. And then, at that point in time, it's going to really look like we have topped out right here. And then we'll start putting in our, retracement, Fibonacci retracement of the move up here. So look, if we come down to the 236 and the 618, this is probably going to be a nice bounce right here because it's the 618 of the macro top to bottom. It's also the 236 in green here of our move from the bottom to the top. So the likelihood that we get a bounce right here on this area is very high likelihood. Now, do we just bounce up and put in a lower high? I think probably. We probably get like an A, B back up to like that 93 or so, and then a C, another push down, maybe to the 382, maybe to the 0.5. But that's where I really start getting interested is when we see the confluence and we have, a respectable pullback. But as far as I'm concerned, this is not good. The fact that it topped out in 2019 and is putting in potentially what amounts to a lower high, not good. But we'll see. I mean, I don't necessarily think Hasbro's obviously a big toy company. I don't necessarily think they're going anywhere. But in the meantime, they got a lot of headwinds. If they can't get products, if they're manufacturing everything in China or wherever, and it's stuck on ships, or they can't get stuff here in time for Christmas, maybe they have a big earnings miss because their demand's through the roof, but they can't get the product to sell to people. I don't know. I don't know what's going to happen, but the chart's telling us something. So Works and then Sphere. We'll take a little break here soon. So obviously Works been getting crushed. There's another one of our meme stocks that's just been getting absolutely destroyed forever. And then here, this is that signature we look for when something's just been getting wrecked for its entire lifetime and it has lost, I don't even know. This was 150 or something. Oh, I'm sorry. $100 at one point in time and has been getting wrecked for years and years and years. And now here we are, broke above, got the 200 exponential on simple, broke back down to it. It had a little rally today. It's easy to get excited. You see a little 10% rally and you're like, oh my God, this is amazing. Well, again, we're not looking for the 10%. We're looking for the 10x. I mean, this thing is $2. If it ever goes back to $100, that's a 50x. So we don't have to get it at the absolute bottom. We need to get on the momentum and get it, when it's still a good value. So if this reclaims this area and consolidates or whatever, if it starts to cross over some of these moving averages on the longer term, like right now, I don't like that it's below the 8 and 21, looking like it's going to cross back down because I think it's going to sweep the lows again. But if it does start to rally or consolidate here, I think we get the reversion to the mean and we come up here to like $6 or $11. So if we go from 2 to 6, that's a couple 100%. We go from 2 to 11, it's almost like, 500%. It starts looking pretty damn good. And then again on the monthly, I don't particularly love this because what it looks like is it looks like a pushback up and rejection off the 21. Looks like a pushback up and rejection off the 21. So, we need to really just reclaim this 8 and consolidate on top of it. We never really did that before. We got here was our first close and then we got an open and a close on top of the 8. So that would have made me somewhat bullish on this. And then afterwards we just sell off and then we can't get back above it again. And then here we get the close above it, but then we gap down below it again. So if we get this first, we've closed above it here, opened, closed above it, and then we closed and open and close below it. If we can consolidate here and just get even a decent, even if this does nothing for the next 2 weeks and closes the monthly right where it's at or right around here, this is going to look very bullish to me. Hard buy, bearish control zone, all green histograms, got crushed forever. The risk reward on this thing starting to look real, real juicy. on all time frames. But again, because this is some piece of shit company that doesn't actually do anything and has been getting wrecked forever, is this an investment? No, it's a trade. It's definitely a trade. And then any sphere, this is another one. It started to look like it was going to break down from here. Could you have capitalized on like almost 30% gain right here? For sure. I definitely thought this was going to break down here. I expected this to come back down. We also already capitalized on like, I don't even know. I think I took the trade set off. It was like I think it was like 140% or something like that was the last trade here. So I'm not in a hurry to give it back, but this potentially looks like an inverted head and shoulders, like potential bottoming pattern, something like that along the way here. So we'll see what happens. Maybe you could draw it a little different, but as far as I'm concerned, the main thing I'm focused on right here is obviously holding above the 200 exponential and simple on the daily, and then also this ascending channel, because we have obviously a bottom, a top, depending on what time frames you're looking at. It is a little more well drawn. We don't have this like sticking out the tops on the longer time frames. But here we are retesting the top of the channel. I fully expect this to top out around this range and come back down. And then I will be taking an entry at like 2 something when it comes back down. But after a massive move up like that, I'm very hesitant to get back involved with something like this when it could potentially just lose 66% of its value. But again, the risk reward on this, absolutely phenomenal if it decides to push up here. And again, you can see like the channel a little cleaner here on like the weekly time frame. Our touches and everything. But essentially, we have a resistance right here that we're running into. We have a neckline top essentially right here about like the 382 or something like that. We have the top of this channel right here. So it does not seem unrealistic that we top out right here, roll back over, retest the 236, retest the red previous resistance as support, put in the right shoulder right here. This is a big buying opportunity for me. Again, for like a scalp or swing trade or something like that. This is like not a real company. I mean, it is a real company, but they haven't done anything ever since 2014. 2014, they topped out at $2,300. Now it's $8. So whatever they've been doing for the last 7 years, not great. Probably not great. But it did make it back above the 200 exponential moving average. So, we'll see. We'll see. There's definitely some potential right here for some profits, but, and again, could have took a little scalp right here, made a little profit on it. Sure. But it's a tough one on something like that after it's moved so much. I'd rather take a shot on like uranium and buy something that's strong, but has strong potential than something that's like, fake. Same with cryptos at these valuations. So you're like, oh, SHIB could run another, 300%. Sure. Or it could go to zero tomorrow. Shiba Inu. Oh, very nice. Walmart, still looking rough here. Below 200 exponential and simple. Rejection, gap close, maybe consolidates. Hard buy, a couple green histograms. Looks like it wants to try to push back up here. Again, everything in the stock market pretty much is starting to look the same here. Where it's either barely holding on to or losing the 200 exponential and simple and, flipping over slope line red. So I am very, very hesitant on a lot of this stuff right now. Western Asset Mortgage Capital Corporation. Again, this was a trade setup we put in play. I did not take this trade. Obviously, anyone else can feel free to. Remember, it's not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research and trade responsibly. Reversion to the mean. Reversion to the mean. We have nice little momentum picking up here. We're getting back above the 821. It's a 4-to-1, 3-to-1. Risk reward ratio just to push back up and retest the breakdown of our blue slope line right here, and then also the 200 exponential and simple. Just so happens they're going to both cross right here around that time. So you can mark my words, on October 26th 2021 there is a very, very high likelihood that this will be at $3, maybe $2.99, and it gets rejected, and all those people waiting to sell at $3 were like, no, and then it falls off the cliff. Probably that's what'll happen. Probably. MGM, this is what we talked about. We were at resistance right here, came back down. This thing looks strong, looks better than almost anything else in the stock market. Consolidated on top of that level, had a nice little candle up here, breakout. I think it was like up like, what was it? 44 to 48. Yeah, it was like almost 10% on that candle. Looks good. I mean, when we look at the big scope on this thing, And obviously previous all-time highs way back here in 2007, and then we had our low down here in 2009, but now we're basically operating inside this big old channel, and the heart line is acting as support. So as long as we're above that heart line, our target is still going to be the Fibonacci retracement 886 up here at $63, or potentially as high as a 1 point. It was basically just from the previous high, but the top of the channel itself, which is about $100. So it's still that's a double from where we're at right now. It did reclaim 200 exponential and simple. The slope is to the upside. It looks good. Looks good. One of the few things right now that you can find where the chart actually looks good. So toast to, I can't remember who it was, but for pointing that one out. I'm going to take a quick drink and we'll keep ripping through here. CW says, could you look at Armor Residential REIT? Thinking about selling after dividend. Yeah, I'm sure you're not the only one on that one, brother. Yeah, I will take a look at that. Yeah, I got to be careful with those REITs right now, too. Like anything that's supposed to be like an inflation hedge or protection against inflation, not nearly as reliable when the government's like lying about the actual inflation. The hell did I just do? Excuse me. There we go. Yeah, let's just zoom out here and take a look at the monthly. Obviously getting wrecked in this bitch. Yeah, I mean, yeah, I mean, it basically pushed back up to 21, got rejected, came down. Now it's struggling at the 8. Starting to pick up some momentum, cross back above the slope line here. Definitely Stokes seeing some momentum to the upside. Not a ton to see here. Weekly looks okay, hard buy, bunch of green histograms. It is below the slope line. Looks like it wants to cross 821 back up here. I mean, it looks like it may want to revert to the mean, come back up to 200s, 1575. I don't know why it's not showing when the dividend is on here. But I'm sure there's probably a bunch of other people thinking the same thing as you. And typically, oh, what the hell? Does it not show it on the weekly? Did I just not notice that? That's so weird. Anyway, here we go. So yeah, all right. So your dividend is going to be the 14th. Oh yeah. So what is that? Like tomorrow? Yeah. Okay. So yeah, this just looks like a retest of the 200 exponential, 200 simple. It could go as high as like 1150 or something like that. And if you're thinking I'm going to sell on the dividend, well, let's look at what it does every other time. Dividend and then it dumps. 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 This one, it did not dump after the dividend. But, we looked at 1, 2, 3, 4, 4 out of the last 5, it dumped right after the dividend. Again, here it dumps right after the dividend. Here, not really. Here, yeah, pretty decent dump. Not really. Not really. But, I think that's probably a go-to strategy for anybody in this one. But, yeah, I mean, I don't think it's unrealistic. But, yeah, I think tomorrow's the 14th. So, probably a bunch of people thinking the same thing as you. So, I wouldn't get too greedy on this one. Because if it does sell off, it got picked back up by the 821. I mean, it could easily go up to 1150 though, but it's just up to you. Do you want to take that risk, for some gains, or do you just want to get your dividend and get out. I don't know what your entry is or anything like that, but all right, let's keep ripping. So let's do our cryptos next. And I may take it a little light on the stocks today since I spent so much time on commodities. What time is it? 10? We're about 2 hours in. That's not too bad. I mean, it is. It is. It's a long time, but it's not too bad. So Bitcoin, looking pretty good. All green histogram, still above the slope line. Bullish control zone. Definitely at some elevated levels. Bounced perfectly to 200 exponential and simple. Definitely some resistance right here. I mean, you know, if we're looking at CME futures chart, there's like no resistance left. We got a couple candles right here and then a few days right here. You know, what is this? Are we coming up here to try to fill this gap? You know, did we already fill the gap right there? I mean, I don't know. 61,750? 61,750? I don't know. We'll see. I mean, still it looks bullish. Looks good. Bitcoin daily chart. This one is Coinbase. Again, you know, we're at like max levels up here. You know, we're at 100 on the stochastics, 99.53. You know, we had it topped out here, topped out here, topped out here, topped out here, topped out here. Every time we get to this level, we top out. But what does that translate to in actual price action? Well, here we continue to the upside. Here, you know, we had a little sell-off. Here, we continue to the upside. You know, here we have a little sell-off. Here, you know, continue to the upside, but then that's like, you know, a decent little top pullback right there. So are we just going to keep floating up right here? Or is this going to be a top? I mean, again, there's some resistance right here. We have the peak right there. We have the peak right there. We have a decent amount of chop right here. We're seeing some definite weakness on the MACD. I prefer to see a signature like this where we get two humps and we put in divergence on the second one. Sometimes we'll get the, you know, two humps and put in divergence on the second one. Sometimes we'll see convergence like this. Sometimes divergence like this. And, you know, what I'm saying is here we have a low and then a high and a high. And there's convergence between them because they both are higher highs. And then like here we have a high and a high. And then we have a lower high here, but a higher high on price action. And then we get, you know, basically, I think this was like almost a quadruple divergence because we had a high, a lower high, a lower high, and then the same high, that little nubber right there. And then in price action, that was a high. This was a high right here. This was a high right here, and that was a high. So that was like our quadruple bearish divergence. And then we broke down out of that range. So, you know, I'd like to see something more like that. Here we're starting to see a little divergence poking up, but we're not seeing it on like the RSI. You know, not really seeing it on the stochastics. So nothing really telling me that this thing's got to just roll over right here. On this chart, on the shorter time frames, we're seeing a little something. This is what I was paying attention to on the 4 hour. It was starting to look a little toppy right here, like it wanted to let go. The 821 started crossing down right there, but it immediately got picked up. So what is this? We got a high right here, high right here. We have another high right here and a rejection off the slope line that's now red, and another high right here. And now here we're coming back up to potentially get rejected a third time for another lower high while we're putting in potentially 4 hour higher highs. So it looks to me like we're going to put in some triple 4 hour bearish divergence. But we're above the 200 exponential, above the 200 simple, 200 exponentials on top of the simple. You know, this is bullish to me. So pullback should be bought, in my opinion. Now, we did have nice solid trend to the upside, an attempted cross back down that got rejected. The same way when we have a trend to the downside, we have a trend to the upside that gets rejected, and then finally it goes up. You know, so we go up right here, come back down, get rejected to the downside, and then eventually we sell back off. But honestly, I think 50,000 is really the area that we're paying attention to. And we're really paying attention to it as a buy, as far as I'm concerned for now, until something changes. What's the catalyst going to be? I think the only thing that's going to really crash Bitcoin right now is if the stock market crashes. Otherwise, I think we're going to new all-time highs. It looks good. Once we reclaim this level, the 200 exponential and simple, flip the slope back over blue on these, and now we're above them. You know, this is probably literally just a few days away from crossing to the upside. And once the 200 exponential is back on top of the 200 simple, Bitcoin looks very, very bullish to me. You know, it's similar to like a situation like this. You know, we basically have like a little fake out cross, and then once the 200 exponential is back on top of the 200 simple, cruise back to the upside. So, you know, but we also have, you know, let's not forget about the ones that are less desirable. Here we have the 200 exponential is about to cross the 200 simple, and then all of a sudden COVID strikes and we capitulate. So let's not rule that out just yet. But, you know, we're seeing a lot of signs for bullishness, and our 70+ thousand to, you know, $1 trillion Bitcoin by end of day. By end of hour, by end of stream, Bitcoin should be at $1 million by end of stream. I mean, maybe, possibly. There's a chance. Let me check my magic 8-ball. Oh, it says doubtful. It says doubtful. Ethereum, again, we have a high. We have a lower high. You know, we're taking out this high right here, which is good. We really just need to take out this high right here. And then at that point in time, all-time high. And then this thing could just cruise. Losing some strength, 200 simple above 200 exponential. But overall, Ethereum looks good. It had a powerful move today off to 21. Looks good. ETH to Bitcoin ratio, we're bouncing the 200 exponential and simple, as we've been discussing. The longer we consolidate here, the more likely we are. I think we're at least going to get some sort of reaction rally off of this. You know, what does that mean? Maybe Bitcoin goes sideways, maybe Bitcoin goes up, and Ethereum just starts going parabolic. Maybe Ethereum hits 7K, 10K, a billion, $1 trillion. Maybe Bitcoin goes to a babillion, a gazillion, a trillion, whatever the next thing is. Probably not, but maybe. Looks pretty good though. You know, it looks good. I think Ethereum to Bitcoin ratio has probably bottomed right here, at least for now. At least for now. Again though, 200 simple back above 200 exponential, starting to show obviously some weakness leading into this, but I think we at least get some sort of reaction rally. So if I was going to buy right now, you know, $100 or $1,000 or $1 million worth of either Bitcoin or Ethereum, which one would I buy? Well, I would probably buy Ethereum based on this chart. And that's like our gold silver ratio chart. FTT looks weak, cannot get back above the 821. Just really needs to get back above $55. And then I think it can cruise up here. 200 simple above 200 exponential. Longer we're up here for, more likely the 200 exponential is to get the cross. Hard sell signal right here. Looks weak. This one looks weak. Chainlink still looks weak. Barely hanging on to 200 exponential. Cannot get back above the 200 simple. It just needs to get back above 2750. And then this thing can look okay. Hard sell signal. Looks like it's getting rejected by the slope line. Chainlink just looks weak. Solana broke down from the channel as expected. Did not get the measure move. Still trading pretty technically. What I'm really paying attention to now, though, is, again, below the 8 and 21 moving average. 8 and 21 are about to cross. It's basically at resistance right now. It needs to close above $151, or all of a sudden Solana is not going to be cool anymore, because it's just going to start dumping. How low is it going to go? I don't know. There's plenty of support back here. I think 131 is probably going to be a floor. If not that, 125. But, you know, people are going to move to the next shitcoin. They're going to be in SHIB, or they're going to be in, you know, CumRocket, whatever the next cool one is, guys. This is garbage. It's trash. I mean, it has potential one day, but nothing has changed. It's not worth 5 times more than it was a couple weeks ago. It just got cool. It's just, look, Solana is just riding on a CumRocket right now. And eventually, once everybody got their nut, it's going to crash down to the floor, and it's going to be filled with regret and sadness. Okay? And you're going to find out that you lost a bunch of money. Was it worth it? Was the fun? Was the juice worth the squeeze? I don't know. I don't know. It's not for me to decide. It's for you. You know? Go say your Hail Marys. You know, donate a couple dollars to the Catholic Church or whatever. And then, you know, go on with your life. Uniswap, again, weak. Just hanging out. Can't get above the 200 simple. Slope is to the downside. Barely hanging on to a 200 exponential. You could argue this like an inverse head and shoulders type deal. I mean, it just needs to get above 26.36, and then it starts retesting like 31.50, and then all-time highs. Retest all-time highs. But right now, it looks weak. It's not cool anymore. Uniswap is not cool. There's too many other shitcoins that are new that are pumping more. No one cares about technicals anymore. No one cares about technicals. No one cares about the quality of their investments. Everybody just wants a CumRocket, Shiba Inu, Dogecoin, Solana, like 10x on some trash bag. That's all people care about right now. That's it. So leave behind your XRPs. No one wants them anymore. It's never going to take over the world. Dash is garbage. It's trash. And just get on the cum rocket money train, okay? Buy up some baby shibs or whatever it is. What is it? Baby doges, okay? Pay Elon to tweet about your baby doge and, fuel up the cum rocket and we can all go to the moon together. But if you sit here on XRP, you're just going to, you're like the dude who's talking about silver. That's manipulated, the courts and the SEC, and it won't let the XRP go to the value, and they're just accumulating because they want an XRP before it goes to $83.38. I don't know. I don't even know what these crazy XRP people are saying anymore. Looks better than most. It's at least above the 200 exponential on simple, so that's good. Thought I'd get the hard sell signal. XRP still looks pathetic. Maybe it gets back up here to $1.38. It still looks terrible. I mean, it looks good, better than most, but it's still trash. Dogecoin barely hanging on to 200 exponential. Looks like crap. Looks like trash. Now let's talk about that money train. That SHIB nasty. Woo woo. Oh yeah, look at that SHIB. All in. It's only got there's only 500 trillion SHIBs. Okay. Only 500 trillion of these cryptos. So if you're not all in on SHIB with zero usefulness, with a little dog meme with 500 trillion supply, if you're not in on this now, you missed the boat, son. Because it's going to a penny. It's going to be worth $10 trillion market cap. Okay, which just so happens to be 5 times the total crypto market cap currently. But it's going there. You just don't get it. You just don't understand. Okay? In the words of Kathy, you just don't understand. You don't understand what SHIB is all about. It's a movement. It's a cult. But we don't call ourselves a cult, though. Because we're just a bunch of friends that believe in something and are willing to die for it. SHIB nasty. Showing a little weakness here, okay? I mean, it looks like it wants to enter the bullish control zone. We are seeing a red histogram developing on the daily. Come on, SHIB. I'm all in on this. Come on, SHIB. I need you. It's hanging on. I'm going down to the 4 hour because there's just nothing else to look at on this. So bear with me here. SHIB nasties. Or whatever. I don't know what the SHIB cult is called. I can't keep up with all the cult names. So if you guys know the cult of a crypto that I look at, please let me know. Or meme stock. That way I can appropriately refer to the apes or something like that. And why are all meme coins named after primates? Like the apes and the monkeys and the silverbacks and the gorillas and I don't know. And then all cryptos are named after little annoying dogs. The SHIBs and the baby doges and the dogecoins and I don't know. It's very, very strange. So yeah, SHIB on the 4 hour, barely hanging on to this level. If it breaks down below 0.0000287, we're in trouble. But if it just pushes up right here, I don't even know. Next target, all those zeros and then a 3. Next target after that, a bunch more zeros and then a 3, 1. And then after that, new all-time highs. Bunch of zeros and then a 3, 3. And then after that, a penny. And SHIB is worth $10 trillion? Huh? Probably not. Probably not, guys. Probably not. I don't even know. I can't even do technical analysis on this. No one cares. ADA looks weak. Below the 8 and 21. Cannot get above it. It is well above the 200 exponential and simple, so that's good. This thing really looks like it wants to come down here. It really looks like it wants to come down to $1.75. $2 should hold. Oh, maybe not. Where is it even at right now? 220? I don't know. Where's Charles at with the live streams? Come on, Chucky. Hard sell signal. I don't know. It doesn't look great. It looks better than most. It's above the 200 exponential and simple, but only because recently it had a massive push up because of Gauguin or Trojan or whatever, the old Trojan horse that Charles used to sneak into your back door and stick it to you. Basic attention token looks very weak, below the 200 exponential and simple. Really needs to get back above 71 cents. After that, gonna have trouble getting above 83. I mean, the fact that the trash coins look good when Bitcoin looks bad, ETH looks good when all the trash coins look bad, Bitcoin looks good when all trash coin looks bad. A trash coin can run, but no other trash coins can run. It's like musical chairs in the crypto space right now, and not in a good way. Not the type of musical chairs where everyone has fun and then you go get a beer afterwards. Not that musical chairs. Actually, I don't think anyone actually plays musical chairs and then drinks beer. Pretty sure that's a child's game, but more like Duck Duck Goose. Okay. FTM, still looking good. You know, as long as we're holding above key level of $1.65, I think we just keep hitting these Fibonacci targets, fib extensions. It is getting a hard sell signal. It is seeing some red histograms here. I think it's just going to continue to go sideways or maybe get like a little pullback. But I suspect this thing's going to be at $3 soon. You know, and keep in mind, you know, it's basically as good or better than Cardano is, and no Charles Hoskinson. So maybe it's time to switch over. It's a legitimate argument, you know, for value, and then also no Charles. So probably a good idea. Polkadot hit our target exactly to the upside. Damn, I didn't even notice this. Nice. Should probably sell some Polkadot. Okay, yeah, so we perfectly hit the 1.236 and the red box target. Yeah, over $40. What'd it get up to? 42.91. We did it, guys. Polkadot did it. Exactly as expected, as discussed, as planned. Hooray! Well, well, well. Well, Charles, it appears Polkadot has taken over. Yeah, so it looks good. Does it keep going up here? It probably. I mean, blue sky breakout. So what's up? We going to Polkadot, $50. Boom. Do it. Do it. Got to be careful, potentially, of bearish divergence. But, I mean, this thing still looks strong. Just flipped the slope back over blue in the bullish control zone. Did have a very powerful move up here on the knife. But typically won't top out exactly then. It'll typically creep up a little more and then have a heavy sell-off. So, it looks good right now. We did it, Polkadot. What was that last daily candle that I didn't even notice? Nice, 20% move up. Good job. Good job, Polkateers. Good job, Dotters. I don't know. What's the Polkadot cult called? I don't know. I can't keep track of all these cults, guys. I like the Polkateers. So I think Polkateers is probably the way we're going to go from now on. I'm one of the Polkateers. Matic. Not really doing anything. Just literally, I mean, it's just trying to make up its mind right now. This thing trades pretty technically. And, yeah, I mean, that's a donezo. Can't win them all. But I didn't take the Matic one. I messed with the, I can't remember what it was, Bat or something like that. It looked like it had some potential here. But, you know, it's basically just doing nothing at this point in time. Could still have that next push up to the 786. Could easily come down to the 236. In the meantime, though, it's just range bound between the 382 and the 0.5. But basically just going sideways. Need to see something, some kind of in or outflows. Bitcoin dominance, as expected, doing exactly what we discussed. It is now broken above the 21. I imagine it will consolidate here for a couple days somewhere around this region. Once it reclaims this area, 821 potentially switch back to the upside, and then I expect it up at 57. Once again, as expected, and once again, as discussed throughout the stream, that is just a reversion to the mean, a retest of the 200 exponential and potentially 200 simple, between 57 and 61% Bitcoin dominance. What is this going to mean for altcoins? Well, they are either selling off heavily while Bitcoin sells off less, or Bitcoin is going parabolic while altcoins don't go as parabolic, or some combination of those two things. But this chart is telling us Bitcoin is going to be gaining momentum and value compared to altcoins. So maybe time to get out of all your little shitty shit coins, all your little Fibonaccis, your Matics, your Cardano beads, your XR penises. Time to dump all them and get you some actual crypto like Bitcoin or potentially Ethereum, because it looks good too. You know, on the Bitcoin to Ethereum ratio. So yeah, we'll see. Total market cap back at the all-time highs right here. Again, you know, we really just want to see a weekly close New all-time high on the weekly close. That's going to look good. Reclaim the slope line right here. All green histograms, bullish control zone. Looks good. Crypto cap looks good. Coinbase, still, just trading very technically. Another rejection at the 382, back above the 821, gaining some momentum right here. Hard buy coming out of these zones right here. Just buy crypto. Fuck Coinbase. There's like nonstop FUD on Coinbase. And it's not even like bad. It's not even really FUD. It's just that they're a piece of shit company. It's not their fault that people are stupid and fall for phishing scams. But at the same time, if you're like a $60 billion company, you could probably pay like 3 people in India to answer your phone. Like, let's be real here. Hood, about to rob from the poor and give to the rich. It's the reverse Robin Hood, the inverted Robin Hood. Again, at support right here and bleeding out. I will see you very soon at $37. And at that point in time, does it bottom out there? I don't know. Maybe it's worth a shot. Does it retest the all-time lows right here at 33 bucks? Does it go much, much lower? I really don't know. It's probably going to develop some kind of bullish divergence. If it starts to roll over, it'll probably be a buying opportunity. I would imagine this thing goes to $53. Now, do you buy it at 40 and hope it doesn't keep going down? Do you wait till it gets to 36 and buy it there and then sell it at 53? Does it just go straight to zero? I don't know. Again, Coinbase and Robinhood not exactly killing it with the positive news, but there's potential to make some money on them. And they're not as shitty as Facebook. Actually, I do hate Coinbase. MicroStrategy, looking okay. Regaining momentum right here, inside the bullish control zone, back on top of 200 exponential and simple. I believe we had some targets in play right here, expecting a potential topper on 800. Measure move still up here at 843. Again, no. I would just, if you're not forced to buy MicroStrategy because you made a deal with the devil, aka Michael Saylor, I would just buy actual crypto. Bed Bath & Beyond. Let's be real here, guys. I was thinking this squeeze might happen after the breakdown, but I looked at Bed Bath & Beyond's like balance sheet, debt asset ratio, sales, projections. Like, this company looks like total shit. It looks so terrible. So terrible. Which explains why it's such a bad company is, it literally peaked. It peaked in 2013 at $80. And then, bled to death and went down to $3. Which makes sense because its balance sheet and it looked like trash. It did get a nice short squeeze, but again, it's probably just going to keep looking like trash. Does it get the squeeze? 50% moves to the upside? Maybe, but I don't know. There's just so many other things. If you're going to get stuck holding something, I would rather be stuck holding something that is going to potentially, like, one day be worth something again. I don't know. Maybe it's bottoming out here, though. It might be worth this trade setup. 48% upside, 8% downside. 6-to-1 risk reward. That would be, a stop loss below the 0.5 at like under like 1350 roughly, and a gap fill at like 2215. But I promise you, Bed Bath & Beyond's debt to asset ratio and balance sheet and earnings projections, and it's all terrible. It's all terrible. And 200 exponential simple rolling over here. Speaking of terrible pieces of shit, GameStop is next. Looking like showing a little bit of strength here. Back above the 21 and the 8. Hard buy signal coming out of the bearish control zone. Bunch of green histograms. I don't like that the slope is still blue here. Definitely has a little potential. Maybe 206, maybe 224 or something like that. There's just so many other things that look better. This will never gain that momentum again. It will never gain that momentum again. And it's just a matter of time, I think, before this thing goes parabolic to the downside. When does that happen? I have no idea. Does it go up first? Probably. AMC, same thing. I think that the GameStop cult is not that strong, but the AMC cult and the bots, I still see like out posting stuff and pumping it up and, stroking each other off. So, if you're going to buy one of these shitty meme stocks, which one should you buy? None. But arguably, if you want to be in a cult, you at least want to be in a cult with a lot of members, I think. So I think AMC wins. Hard buy signal. Chart looks slightly worse though. 200 exponential still above 200 simple, so that's better. But below the 8 and 21. I mean, I don't even know. These, I would say target to the upside, maybe $52, maybe slightly lower. Target to the downside, 0, I would say probably. New egg, just bleeding out. Again, just another meme stock pump. No gaps to fill. No strong fundamentals. No good technicals. No cult members. Leaving the bearish control zone. Hard buy signal. Picking up momentum right here. I mean, if it starts closing back above $15, does it start pushing back up to like 19? Maybe. I bought some of these computer parts off Newegg too, so technically I am a supporter. I am technically a supporter of the Newegg. DraftKings still looks terrible. Trying to revert to mean. Retested 200 exponential and simple above the 8, below the 21. Going to run into some serious resistance like 51. Hard buy. Trying to come out of the bearish control zone. 200 exponential and simple. Trying to reclaim the slope on them. It still looks bad. We're still inside that channel, I think, though, right? Yeah, we still have this channel down here. You know, basically a couple highs, a little poke out the top, a couple lows here. You know, I think the thing is going to get rolled over. Maybe at $46, there's something to do there. Oh, yeah. At 46, you maybe get a push back up to like 54. 17% upside, 5% downside. Yeah, could be worth doing something with. I'm not messing with it, though, but... All right. So, yeah, let's just... what do I want to do? I'm going to skip all the individual junk because I'm getting a little tired. We are running a little long here. I spent a little too much time on the commodities. So let's do Dow Jones next. The Dow still looks weak. Could not reclaim the 8 and 21 right here. This is a pretty bullish candle. Big wick, little body, little hammer. That's good. Overall, it does not look great though. A bullish candle, but other than that, not great. Not great. But I mean, nothing is changing. Same with SPY. Could not reclaim the 8. Bullish candle. It's just being propped up by trash. I mean, there's probably just a bunch of distribution taking place right now, and whoever's distributing all over your face, or whoever's buying this, probably into like pension funds and 401ks, just like is getting dumped on right now. You could argue that there's potential for like an inverse head and shoulders on the MACD here, and then on price action, and it's going to push up. I mean, I wouldn't be surprised if this at new all-time highs, but I don't see anything here. There's definitely no tradable like moves taking place here, I don't think. IXIC, NASDAQ, again, trying to reclaim the 8, 200 simple above 200 exponential, hard buy, a bunch of green histograms. Nothing to see here. The Russell closing stronger than most, reclaiming the 821 and the heart line of the channel. Putting in some sort of like triangle pattern here. I mean, we have like some pretty clear like support and resistance inside of a channel that we've been operating inside for like the last year. So at this point in time, which way is it going to break? Well, I don't know. It's pretty neutral looking to me. If it breaks to the upside, target 23.43. If it breaks to the downside, target 21.20, whatever. I think more likely than not. I mean, it's just hanging out on top of the 200 simple. I think it's going to break down to the 200 exponential. I think this thing 21.50, but again, it's probably just a buy and ride it back to the top and then range bound. Russell's trash. XLB material sector, again, just putting in a giant triangle as far as I'm concerned. Distribution pattern, descending triangle, getting picked up by the 200 exponential and simple, gaining momentum here, pushing up to the upside on the stochastics. Target $85, not really tradable. XLC communication looks a little weaker. Probably coming down here to the 200 exponential and simple. $77. Losing momentum here. Hard buy, try to push up, exit the bearish control zone, and rolling over. XLY, consumer discretionary. Looks like it's getting ready to break out to the upside. New all-time highs. hard buy signal from the neutral zone. Bunch of green histograms about to cross over the 0 and the slope line. Going to new all-time highs, it looks like. XLE energy looks like it's going to cycle highs, consolidating at resistance, showing a little weakness. Still inside the bullish control zone. Stochs are rolling over a little bit. Really we just want to see this area hold. If it breaks down from here, it's not going to look good. Maybe comes back down and fills the gap. But more than likely it's going higher. Oil, nat gas, there's like a bunch of things just like fueling the energy crisis going on right now that's probably pushing up a lot of these indexes. Wait, nat gas? Yeah, it's in energy. Why was I thinking utilities? No. XLI, industrial, weak, barely hanging on to 200 exponential and simple, trying to reclaim the 821. Again, trying to pick up some momentum, but if this thing doesn't start moving to the upside, it's just going to look like a bearish reset before continuation to the downside. XLF financial looks decent. Obviously took a little hit today with rates pulling back. I would expect this to continue to the upside. As for me, I think rates probably going up, but definitely showing some weakness. Looks like it may have some short-term downside. Hanging on to 821 for now, but probably going to be back down here at like 37 bucks pretty soon here, if not lower. XLK. Ugh, excuse my yawns. Boring myself over here. Technology. The old Tic Tac. Looks weak. Looks weak. Tried to reclaim the 821. Couldn't even get above the 8. Probably going to make its way down to the 200 exponential and simple eventually. 142. Trying to build up some kind of momentum, but just not sticking. XLP, consumer staples. Did you take my stapler? I told them if they take my stapler, I burn the building down. Where's my stapler? If you know what I'm talking about, let me know in the chat. It's an old school reference right there. Good movie, though. Good movie. You don't get it. We jump to conclusions. So there's a bunch of conclusions on the mat, and then you jump to them. You jump to conclusions. It's a great idea. XLP, consumer staples, is bouncing at 200 exponential and simple, hanging on for now between the 8 and 21. If it breaks down, I would imagine it consolidates around this like $70 range. If it can stay above, 70, 19 long enough, can probably reclaim this in 821 cross and continue to the upside. Hard buy, bunch of green histograms, reaction rally off 200 exponential and simple. Doesn't look particularly great though. And again, it's going to run into a bunch of resistance back at like 71.50. It's like not tradable anyway, so the moves are just pathetic. XLU, utilities below the 200 exponential and simple, not good. Trying to reclaim that range, a little reversion to the mean after the break. If it breaks up from here, resistance at like 65. After that, it's going to look like a little double bottom, and then it probably comes back up and retests like 68. Hard buy, bunch of green histograms. Again, not particularly great, but it's trying to grind out that bottom. Temp bottom at least. XLRE, real estate, had a pretty heavy sell-off. Reclaimed the 8, closed at the 21 today. Should open, well, assuming post-market, pre-market, assuming it closes back above 45, 58, or like hangs around above that level long enough, it should cross this back to the upside and continue on up here. Again, if commodities are going up in price, if lumber's getting expensive, labor's getting expensive, all the stuff that you use to build a house continues to go up in price, one could reason that house prices will maintain or continue to rise as well. As what is a house? Just a bunch of material slapped together with labor. So, if all that stuff's going up, if we're in a commodity bull market, I would expect a housing market to coincide with that as well. Direct correlation between the price of labor and the goods to build a house and the actual house itself and real estate. XTN, transportation. Had a nice little move back up off of the 200 exponential and simple. Basically just been finding support on the 200 simple. Now looking a little weak again. It looks like it wants to come back down to like 85 bucks. It's hanging on to it for now. Bunch of resistance. I don't know. It's going to be tough. Transportation is one of those ones where it could go either way. Going into the holiday season, I would imagine it would do well, but we will see. I mean, if you can't find drivers, or all the ships are already parked full of goods, or there's no containers, or oil prices are going through the roof and you can't pass on those costs, to the producers or consumers or whatever, maybe transportation does not do well. Jets getting dragged down by Southwest Airlines. It's all Southwest fault. 1,000 flights canceled over the weekend due to weather concerns, but every other airline's fine. Yeah, I'm sure it has nothing to do with the old, prick mandates. I'm sure it has nothing to do with that. It's the weather. Well, every other flight is still flying, and it's to every city. What was the weather event? They're like, it was because of cheese. What did you say? It was because of cheese, sir? Yeah, the cheese. It's the cheese's fault. Sir, that doesn't make any sense. What does cheese have to do with canceling 1,000 flights? That's all the time I got for today. I got to get out of here. But it's Biden's fault. Blame it on Biden and cheese. I got to go. Who was that guy? Oh, that's the Southwest CEO. Was he talking about cheese? Yeah, I don't know what the fuck's wrong with him. I think he smoked some cheese. Jets, not looking great. Still looks very weak here. Hale, trying to reclaim the 200 exponential and simple. It wants a pushback up here. I mean, but it's probably just going to be a pushback to like 59, 60 bucks. I don't know. I mean, this just looks like a giant descending triangle. This would just look like a high, a lower high, and then I think it goes to 60, gives us another lower high. And did we have a descending triangle? Maybe deleted it? Basically, just looking like something like this to me. Something like that. Something along those lines. I mean, maybe I think probably 60 bucks. Not really tradable. But, it's not rental car company's fault. It's Joe Biden and the cheese. Let's go, Brandon. That shit was cracking me up so bad. All right, UPS, still that giant gap up here, below 200 exponential and simple, trying to rally up, bumping its head. They got to pay the drivers too much. The demand is down. The fuel prices for the deliveries of the UPS trucks. A lot of headwinds. They really got to just raise their prices, in my opinion, because none of these things are going away. Hard buy signal, bunch of green histograms, flipping the slope over. This could have some potential for that gap fill. What was it, 15% with a 4% stop loss? I mean, it's like almost 4-to-1 risk reward, but it's like, is it even? We talked about this though. We had the gap down here. We filled the gap to the downside, and now we're going to come up here, fill the gap to the upside, and then just continue to range trade. Probably. That seems very likely to me. Going into the holiday season though, I would expect these transportation, especially like UPS, FedEx, I would expect them to rally. So FedEx is another one. That gap fill back to like 250. It's only like 10% really, but hard buy coming out of the bearish control zone, bunch of green histograms, trying to reclaim this 821 level. There's definitely a tradable range there. 12%, 11 point something percent, 4% stop, 3-to-1 risk reward. I mean, you're not going to probably get rich off of it, but is it an easy trade? Probably. Could it easily continue up here to like 275 or something like that? Rally up nicely? Could it go to a new all-time high? Sure. Yeah, I mean, looks decent. Looks at least good for that gap fill. Looking more and more probable. A close above the 8 and then consolidation would easily take it to 21. And then once it closes at 230, the gap fill is like, the probability goes up exponentially, in my opinion. So, yeah, I'm going to skip all the small cap stuff, or all like the regular stocks that we look at, and cut it off there, guys. Appreciate everybody showing up today. Let me jump in the chat here real quick, see what everybody said. Oh, just CW. Milton Wadhams, a hero without a cape. Who's Milton Wadhams? Oh, wait, is that the Hasbro CEO? that passed away? I'm not sure. CW, if you're there, let me know before I leave. I can look it up, obviously. The name doesn't specifically ring a bell, but that might be who you're talking about, especially because you said hero without a cape. From what I understood, yeah, he was a very good man. So definitely heart goes out to him and his family. Oh, the red stapler. Oh, nice. Yes. I was way off on that one. Yeah, I love that fucking movie, dude. If anybody does not know what we're talking about, is listening to this Office Space. Amazing movie. And, a lot of people have never heard of that. And Jennifer Aniston's actually in that. I mean, there's a bunch of famous people in it, but I think she's probably the most famous. Excellent movie, though. I love it. But yeah, that's gonna, if you told them if they took my stapler, I'd burn the building down. Yeah, but I'm going to get out of here, guys. Appreciate everybody tuning in today. Crypto still looking decent here. Alts not as much, but Ethereum and Bitcoin looking pretty strong. Obviously did well on the dot trade. Time to take some profits potentially off the table, or at least move up those stop losses. Remember, this is not financial advice. I'm not your financial advisor. Markets are extremely volatile. Please do your own research. Trade responsibly. Oh, I don't think I looked at the dollar, but we did obviously see some dollar weakness today. And also weakness in rates. I think that has allowed a lot of these plays to have a decent little move up here. Somewhere on some chart that's not this one, I have a channel drawn, something along these lines right here, where we basically have like a consolidation range, a little poke out the bottom, a little break out the bottom here as well, and then resistance, support. So I do expect this to be potentially temporary support. I would not be surprised to see it come down even as low, potentially as low as the 200 exponential and simple, or like this giant megaphone with the green at the bottom, the red at the top. But I think probably we're going to see quite a bit of support at like that 93 range. I do expect this, though, to continue to the upside and stay extremely bullish. But once again, I would not be surprised to see at least a temporary top on the dollar, because once again, nobody was talking about it when we were putting it in the bottoming pattern. Nobody was talking about it, way back through here. And then after the move has already taken place, after it's like popular and mainstream and everybody's talking about how bullish the dollar is, then it starts going bearish again, because everybody's always late to the party. It's all just a bunch of regurgitation from the same people, the same talking heads, the same analysts. None of them do any actual technical analysis. They all just copy off of each other or, whoever else. It's absolutely pathetic. The hive brain of the media / influencers. But yeah, that's it for today, guys. Appreciate everybody tuning in. Take care of yourselves. Take care of your family. Protect your principal. Obviously, the main principles, the main, trading strategy, trade with the trend, protect your principal, protect your capital, take high probability of success trades by using your little edge on the market, look for higher risk reward trades, you risk $1 to make 5 or 2 or whatever, so you have a better risk to reward. So if you risk $1, you make more, look for predominantly, bullish overall trends, macro views. Try to trade with those trends and use the overall, market and the momentum in the market to your own benefit. And then, of course, stay diversified in multiple asset classes, but, make sure that you practice, make sure that you trade responsibly and you don't just load up on a single trade or whatever. You got to be able to make a bunch of trades over time, because you are going to be wrong sometimes, no matter how many things you have in your favor. So you need to practice proper position size and risk management as well. So but there you have it, guys. Not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research. Trade responsibly. We got a lot of stuff to keep our eyes on. A lot of potential trends taking place. Still looking for what's going to be the big winner for like the last few months of the year, big rally in Q4. I'm not 100% sure what it is. I do think that we're going to see yields and dollar strength here. I don't know. Is it going to be pot stocks? Is it going to be, gold, silver? Is it going to be commodities in general? Is it going to be oil? Is it going to be crypto? Is it going to be uranium? Or just energy in general? I don't know. There's a couple arguments to be made for a couple of those different things. Rest assured, I have my eye on it, and will be paying close attention. And then also for the group members, start getting excited, looking forward to the 10 for 10, 10 under 10 that are going to 10x and the 10 to 10, 10. Timmy. But that's it for tonight, guys. Appreciate y'all tuning in. I will be back on Sunday for our 8 p.m. Eastern Standard Time market look ahead. And in the meantime, take care of yourself, take care of your family, make them dollar bills, yo. And most importantly, protect your principal, protect your capital, and all the stuff going on in the world right now. Keep a smile on your face, stay in a good mood. It's not that bad. This too shall pass. The world is not going to end. This is not it, etc., etc. If you missed out on Polkadot and Fibonacci, don't worry. There's always another opportunity right around the corner. Just a matter of pointing it out, picking it up. If you decide you want to be inside of the trade group as well, it is a paid group, but you do get many benefits for joining, including the TJD Master Indicator with the moving average slopes and all that good stuff that I use throughout the video. If you are not interested in showing your support or joining the trade group, that's completely fine as well. All the rest of the indicators are provided for free on TradingView, as is my chart setup. You can find all that down in the description as well. So appreciate all the positivity, all the likes, subscribe, shares, all the peeps, all the community. Definitely have the best on YouTube. It is small, but it's tight like a tiger. And I'm out of here. Crypto Trend Trader. Peace. If you take my stapler, I'll burn the building down.